independent, impartial sense of where the economy really is at, the nature and quality of economic recovery that we're seeing, and what might happen in the year to come, especially with an eye on the big union budget, the 1st of February. I'm joined on this broadcast live at this time. I want to introduce first Udayan Mukherjee, India Today Group's global business editor, joining me from London. Udayan, welcome. Great to have you with us. And this is the first time we're anchoring together, so it's a debut of sorts, and fantastic having you live. Welcome. Joining us for this special conversation is Neelkanth Mishra, Head Equity Strategist India at Credit Suisse, one of India's sharpest economic minds. Dr. Shamika Ravi joins us, Senior Fellow at the Brookings Institute, works very closely at the intersection of the economy and healthcare. We've got Pranjul Bhandari with us, Chief Economist, India at HSBC, and Sourav Majumdar joins us, Editor of Business Today. I want to go across and talk initially about the kind of economic recovery the economic survey is projecting that India will grow in the year to come at between 8 to 8.5%. Now, this is a little less than what the IMF projected, which was at about 9.2%. So the economic survey's projections are slightly conservative, and this is what's happened over the past few years. So we had a contraction in FY21 of 7.3. FY22, the projection currently, we'll know finally, but the projection currently is for 9.2, and the economic survey projects between 8 and 8.5. Udayan, there's been a lot of talk about the nature of economic recovery. The economic survey talks about a W-shaped recovery. There's also been talk of a K-shaped recovery, with the rich getting richer, the poor getting poorer. What's your reading of the actual kind of economic recovery that we're seeing on the back of this pandemic?
Hi Rahul. I think let's not toy with another alphabet, because that would make it too confusing. I mean, you've got K, V, W, and heaven knows or what other kind of alphabets in the mix. But let's just say that all of us agree, and everyone, including the government, agrees that this has been a very uneven kind of recovery. So I think beyond a point to get obsessed by a headline GDP number is not very meaningful. But taking off from what the survey is projecting, I think the projections for the GDP are a bit on the higher side at 8 to 8.5%. I think Neelkanth, who's on the show today, his team is projecting between 7.5 to 8%. And if you look at the street, even other brokerages like Morgan Stanley and Nomura are talking about 7.8%. So I think the broad consensus among independent thinkers is that GDP growth will probably be somewhere in the 7.7 to 7.9% next year. But what's more important, Rahul, is what is the kind of nominal GDP we get this year? Because last year, because of the kind of bonanza we had on taxes and many other factors, the base effect, etc., we had a nominal GDP growth of 17.5% plus, 17.6%. But I don't think this year we're going to get anywhere close to that. Even if we get a 7.88% GDP growth, we're going to end up at maybe just under 14% nominal growth. And that is very, very crucial in the government's estimates tomorrow on what kind of revenues it is expecting for next year. So I think very uneven recovery, but more than the GDP number itself, what I think all of us need to be figuring out this year is what happens in the interplay between fiscal and monetary policy for growth, supporting growth, and what happens to inflation. Because last year we spoke a lot less about inflation. My gut feeling is that, as the survey suggests, we are going to speak much more about inflation this year.
Neelkanth Mishra, the survey assumes that there will be no further pandemic-related economic disruption, a normal monsoon, withdrawal of global liquidity by major banks being orderly, and that there is no major oil price increase. Your sense of the economic recovery that we're actually seeing, and what the growth numbers could look like in the year to come?
Yeah, so I think that growth can surprise on the upside, and quite meaningfully so. And a very important driver of that will be government spending. To give you a number, which is very striking but has been surprisingly ignored by most commentators as well as, unfortunately, the markets, the cash balance that governments hold, that is with the RBI, is now 5.5 lakh crores. At normal times, it should be in the 50-60,000 crore range. So there is 5 lakh crores, that is 2.5% of GDP worth of cash lying with the RBI. This is the governments being unable to spend. If you see the assumptions in the economic survey also, government spending, as per, of course, the first advanced estimates, is expected to go up in FY22, this fiscal year. In the first half, it was down 5%. So what it assumes is that there will be a 29% pickup in the second half. And clearly, because of Omicron, so far we haven't seen that. So we did see a slight pickup in October, November, but then it again slowed down. And I think that how the government can accelerate the expenditure of things it has committed to do and it has the cash for. So the narrative over the past decade has been that the government lacks fiscal space. Right now, central tax to GDP could be 12%, which is an all-time high. The fiscal deficit that the markets are anchored to is a very high level. And the government spending is actually a lot lower. This is not just the center. Actually, the state governments are much more to blame for this. But in aggregate, government final consumption expenditure has actually been a drag on GDP. And I think getting it up and running is going to be very important because we borne the cost. The bond yields have gone up because the markets are worried about higher fiscal deficits. But the government and the state and central governments are sitting on 2.5% of GDP worth of cash being unable to spend. Getting it off into the economy is going to be a very major growth catalyst. And I think if we manage it prudently, despite all the headwinds that you mentioned and the economic survey mentions, I think we can do 9 to 10% growth in FY23.
Pranjul, one of the things holding back the India growth story over the past few years has been the inability or the lack of willingness of the private sector to invest in greenfield projects. Given the fact that we're just coming out of the pandemic, hopefully, fingers crossed, Omicron numbers now coming down, and that capacity utilization is reaching levels where companies might want to invest afresh. How do you see the current investment outlook in India Inc. and the desire to try and start big ticket new projects?
Yeah, thanks. This is a very important question. Let me sort of put it in a macro backdrop. The next 2 quarters or so will be very strong growth, led by pent-up services demand, especially once the Omicron wave is behind us. So we'll almost forget that, we are sort of going through this uneven recovery. Everything will look really good. My problem is that at some point, pent-up services demand will begin to fade. It will run its course. In the same way, towards the end of last year, pent-up goods demand had begun to run its course. And then suddenly, in the second half of the year, we'll be wondering what's going to drive growth. Growth numbers could begin to slow. And then we will look for a new growth driver. If you ask around, a lot of people say that's when investment will rise and that will be the big driver of growth thereon and for many more years to come. My problem is that there have been many false starts in the past. We've been waiting for the investment cycle to rise for almost a decade now. True that, some things are looking favorable. World growth is better now. Through the pandemic, many large corporates have been able to clean up their balance sheets, so they are in a position to invest. But there are many other factors that are not looking as helpful. And the biggest problem is uncertainty. Global policy uncertainty. With so many waves coming, commodity prices rising, all kinds of shortages from chips to containers, central banks changing stance, things are so volatile. Volatile environment is somewhere where investment doesn't really flourish. So I'm a bit worried about, what will really set the stage for investment growth in the second half of the year. And I do think the budget actually can play a very important role by just being extremely predictable, stable, transparent at a time when the whole world is very volatile. I think the budget can really play an important role by just being boring. The benefits of being boring when everything around you is just so unpredictable. I think we can see that in the budget, and that will be the best budget to have. No changes in tax rates, high quality spending, gradual fiscal consolidation, continuing with social welfare spending, doing capex. All the things that outlined last year, just continuing with that without any new innovation is the best thing the budget can do to increase the investment cycle towards the next second half of the year.
You're playing a bit of a party pooper, especially for India Today and Business Today, which have very bullish budget coverage plans, and a boring budget doesn't necessarily help that. Pranjul, of course, talking about why boring is good given the current circumstances. Dr. Ravi, you work at the intersection of the economy and healthcare. I was talking to a few of the country's top businessmen just this morning, and the sense that I picked up is there is still some hesitancy, there is still some lack of clarity about what lies beyond Omicron. Will this be where this pandemic ends? Could it continue? Do you think this hesitancy or the lack of clarity, this unknown remaining in the horizon, hold back the investment that Pranjul says is very critical to drive the growth story going forward?
So Rahul, I don't just study the economy and healthcare. Frankly, I think we have to get the focus back on the real economy. I think we get so obsessed about the governments, and I think governments also gets obsessed about balancing its own budget, that we forget that the central role of a government is to really come up with policies so as we can move towards fuller employment, so that we don't have idle resources. And currently, at least from the economic survey, and again, I'm yet to look at it in greater detail, but I think we have to be a little more serious about job creation. The trends that Pranjul is talking about and Neelkanth also mentioned. See, we can talk about short-term trends, but the longer we know, for a decade now, private investments have not picked up, which means, and in the immediate short run, we have seen consumption fall overall. Our dependence on government expenditure to really pull us out is very high. And that was showcased rather clearly. Last year's strategy that Nirmala Sitharaman laid out was a rather clear one. If we're going to spend ourselves out of this slowdown and spend on quality infrastructure investments, etc. But that, the link between, and you've seen capital expenditure in the last year actually rise significantly, and that's a good thing, and it needs to be highlighted. But what is the strategy for job creation? I'm yet to, frankly, see a strategy, and I think that becomes the larger issue. You see, Omicron, despite, of course, it's not as dangerous. Now, one future variance is something we have to be prepared for, but it's very clear that there is greater certainty now as far as the pandemic is concerned. So managing uncertainty remains the government's central job, and I think they've done a fantastic job as far as vaccination rollout, as far as just managing healthcare infrastructure and readiness with testing, etc. So I think the pandemic is less of a concern to me now. To me, the larger concern is this long-term, structural, what is the long-term growth strategy that we are going to see unveiled tomorrow? And I hope it is one of, moving around the jobs and the investment cycle.
Sourav, you spend a lot of time every day talking to the leading lights of India Inc. What's your sense of the overall mood in corporate India on the issue of certainty versus uncertainty, the pandemic ending? Is it really, should we just hold on for a while? Because a lot of the job creation aspects that we've spoken about really depend on whether the private sector growth engine kicks into gear and they start firing as well, in addition to the dependence on government expenditure.
Well, Rahul, I can just, to answer your question in just a simple way, I think the business today index, business confidence index, if you remember, was at a 10-quarter high in the quarter ended September last year. That, in the latest one, which we've just put out recently, is actually gone down significantly, which is a barometer of how corner rooms are looking at the future. Now, that will obviously impact private sector investments, and that's how corporate sector will be looking at waiting and watching before something, before committing investments into the market. Now, the point here is last year and the year before, we were talking about, the various waves of COVID and the uncertainty around that. But I tend to agree with Udayan and Dr. Ravi. I think we need to look beyond that and beyond COVID now. We've somewhere as the corporate sector figured out, or as the economy figured out, how to deal with COVID. But the question here is inflation. The question here is the global uncertainty and the whole gamut of uncertainties which are coming from abroad. That is another question which nobody has clear answers to. So I'm afraid I really can't go with this bullish, 8 to 8.5, sort of figure which the government is putting out at this point. My sense is it will be a little lower.
Okay, let's spend a moment talking about jobs and the best strategy for job creation. For India's employment to population ratio to be near the global average, nearly 600 million people need to be at work. Currently, only 400 million people are at work, which means that there are 20 crore people, 200 million people who need jobs or would like jobs but don't have jobs. Udayan, your sense of the best strategy that the government ought to be following on the issue of job creation, given the different constraints that are at play?
You know, Rahul, some of it is not in the realm of the government or in the capacity of the government to do, because I think it has to fire on both engines. On one hand, you will need to get a restarting of this capex cycle to get meaningful employment growth in the country. Now, when that happens is a trillion-dollar question, because capex typically, corporate capex typically picks up when two things are in place. One is when there is clear evidence, not expectation, but evidence of a profit cycle which has begun. And you typically need a couple of years of good profits for companies to be a sort of sanguine that they need to be investing right now. We've started on a good earnings upgrade cycle, but corporate profitability has not been strong for 6 to 8 quarters on the trot already. And therefore, there is some uncertainty on whether companies should be investing. The other, of course, is when capacity utilization in the system goes up meaningfully. It has started worming its way up, but I don't think we are at the point where it is maybe pushing past 80% capacity utilization, where companies say we have to invest right now. We are not there yet, though the journey might have begun. So one part is corporate capex and corporate employment generation. The other part is what is going on with the informal economy, which is where a lot of the employment takes place. I mean, I'll just give you a number. India probably has something like 7 crore SMEs. Each of these SMEs employ 1 to 5 people. Now 7 crore into, even if you take the midpoint, 3, we are talking about 3 people per SME. We are talking about 20 crore people getting employment. Now that is the part of the economy which has really been hurting over the last 4 to 6 quarters, the MSMEs, which are small employers. And if the government wants to do something about employment, then I think that is what it should be targeting squarely, how to improve the lot of the SMEs so that employment in the informal economy goes up a lot. I don't think the government needs to do anything with the corporate sector. Corporate sector capex will come in when capacity utilization improves, and that is already happening. And the government has already done its bit with corporate tax cuts, etc. for the corporate sector. But the moment you talk informal, I think a lot needs to be done. And frankly, all these fund of funds for SMEs, etc., which the government has done, I don't think those are working. So I think this budget becomes very important from an SME perspective, an employment generation perspective, because we just cannot be talking about the formal economy, which is doing much better.
Over the past few days, we've seen what are being called, Neelkanth, India's first unemployment riots. In different railway stations of Bihar, we had a situation where 1.25 crore people applied for just 35,000 posts in the railways. Now that could either be an aberration or that could be a visible manifestation of a very deep-rooted underlying problem. Your sense of how Finance Minister Sitharaman should really be addressing the job crisis?
Yeah, so there is a problem of jobs, right? And this is not today's problem. This is something that we have struggled with. What we need to also look at, and to respond to what speakers before me have said, the first thing is we have not yet fully normalized post the pandemic, right? So there are many jobs which have not yet come back. So there are about 2.5 crore jobs, which is about 5% of the workforce studied in those samples, which have not yet come back, right? And so these are jobs in construction-related materials, so tiles, bricks, cement bagging, etc. There are jobs which have been lost in construction equipment production and servicing, on auto manufacturing, which of course there are supply issues which are well discussed. On the services side, these are personal jobs, the office boys, the administrative assistant, domestic help, drivers, etc. As the economy opens up, right? So all the bus didis and the conductors and the small auto wala driving the kids to school. As the overall economy picks up, I think many of these jobs will come back, right? So that's the first thing. The second is that we are also starting to see some labor-intensive sectors where exports are starting to revive, right? So in apparel and textiles, for example, we were stuck at about $32-33 billion of annual exports for like 7-8 years. Last year, we did 38. And if you were to annualize the last 3-4 months numbers, those numbers are much bigger. The scope for growth is substantial. So companies are talking about 50% growth in CY22, the calendar year 22, over what was already a record year. So the first thing is that the trend is improving. But is there still a challenge? Absolutely. I think for the next 10 years, we need to focus on manufacturing as well as services-related jobs. I think services are a phenomenal opportunity as the world ages, as even simple things like creating educational material, doing routine health checkups. A lot of the things, a lot of the sectors are where the services are getting fragmented and now can be provided at a distance. And I think that provides a great opportunity for India. So there's a lot of work to be done, but I won't be as pessimistic as what some of my earlier speakers were.
Udayan has a follow-up question for you.
Yeah, Neelkanth, I just want to come in on the point that you were making earlier about the cash lying with the Reserve Bank and that automatically being some kind of fiscal space which has not been utilized by the government yet. So I want to ask you a follow-up on that, on whether you see this government's outlay versus execution becoming a sort of a persistent problem going forward. I mean, this year we might have had an Omicron issue, but do you think the government setting out, say, 5.5–6 lakh crores on capex and then not being able to execute optimally and use the entire budgeted outlays, do you see that challenge lingering in the system, inhibiting the kind of capex-related stimulus that we are talking about or expecting?
Great question. And I do worry about that. But the first thing is that this is state plus center, right? So the states last year, FY21, talked about 4.7% fiscal deficit. In reality, they most likely did less than 3%, which was more or less in line with what they did pre-COVID. This year, they are targeting 3.6. When they do their revised estimates, such as the shoddy state of their budgeting, and there are no ways to mince words on that, it may appear at 4.2, but when actual deficit comes, it will be well below 3, right? Because they're unable to spend. This has been a problem in every year. COVID has made it worse. And I think if our tax to GDP continues to be at an elevated level, and which it is this year, and hopefully it will sustain, and I think it will sustain, then the governments have to either decide to give up that space, say that, look, we don't want those fiscal deficits and we will see a speedy consolidation. That, in my view, would be undesirable because government spending shrinking will actually be a negative stimulus for the economy. On the other hand, the risk that I see is that if you see so much of cash lying around, the temptation to do wasteful things, like giving massive salary hike to government employees, which is what India did in 2008-9, and we struggled with the fiscal challenges for a decade after that. I think those kind of mistakes become possible, and I think that is also a risk. So I think the narrative over the next 3-4 years is how can we elevate the level of government spending productively and prevent the temptation from using this cash wastefully.
Dr. Ravi, one of the concerns, the budget red flags, is global crude oil prices and international inflation. We're currently seeing Brent crude at above $90 billion. We're seeing heightened tension between Russia and Ukraine. And in India, we've had increases in petrol prices held back, possibly on account of the elections, which we'll get over on the 10th of March. And a lot of people watching would wonder whether all these international trends essentially suggest that once this election cycle is over, everyone will be paying a lot more for petrol.
Well, the good thing, Rahul, is that after one set of elections, we'll have another set.
That's in November.
Yeah, well, but it's not, I doubt if the government is really going to see the kind of hike that you're alluding to. But you see, this is where I think, the global uncertainty on account of what you're seeing, particularly around Ukraine, etc., does throw in sort of a new set of, uncertainty for us. But I do want to actually stick to the job or the employment problem a little more. And I think this is where those of us who are not just studying financial markets, meaning when you look at the real economy, the problem, Rahul, is the budget gives us an opportunity every year to do something in the short run and the immediate run. But I tell you, jobs is a longer term. Despite Neelkanth's, the trends he talked about, you see, we have one of the lowest labor force participation rate amongst emerging markets. In fact, we are lower than Bangladesh, much, much lower than other markets that we often compare ourselves to. Which is why I'm saying that, we need a strategy around it. Seeing trends in exports to then say that jobs is not a problem becomes, it's perhaps not the right way to look at it. Now, the issue with jobs is a lot of it is dependent on state policies. Because we do know that states that are showing economic growth, and this is where Karnataka, Gujarat, etc. come in, they do show lower unemployment rates across different segments of the labor market. While states that are not registering that kind of economic growth, for instance, Kerala has more than 2.5 times the national unemployment rate. So state policies are very much a part of this. But I think, every budget does give us an opportunity. And I think the economic survey in particular, I think it gives us an opportunity to think of what is our, immediate to longer term jobs strategy here. And I think, that is something I'd like to see more of. Because what you mentioned about what happened in Bihar, and we have seen this happen many times. And I think in a democracy, elections are the natural ways in which some of these problems get sorted. I'm hoping to hear more on employment. Now, those of you who've been looking at the PLFS data, right, and that's a data set we should all be studying very closely, particularly for states that are going into elections. And you are likely to see where is the jobs problem more severe. And it's not just jobs problem very broadly. It can actually be categorized into, the self-employed, how much have they lost in earnings, versus the casual, what kind of unemployment rise have we seen in those? And what is the recovery? Of course, we've also had recovery. But I think we can see for UP, Punjab, states that are going, and Goa, going into elections, we can actually see very, very clear differences in what, the labor market problems currently are. So I'm hoping that tomorrow's budget it also addresses this election cycle, that it addresses the jobs problem, and perhaps come up with a longer-term strategy on unemployment.
One of the things the government's laying a lot of emphasis on now is privatization. The government held back, especially after the Vajpayee years, and I want to show you how year after year, the government hasn't been able to achieve its disinvestment target. Pranjul Bhandari, if you look at actual numbers realized, and some of it wasn't like a strategic disinvestment, but just internal allocations, the government's been able to realize, for example, in FY20, only 48% of the target laid out in the budget, and in FY21, 16%. So far, about 7% of the disinvestment target has been laid out. Today, a 12,000 crore rupee disinvestment did go through, but is there now an increasing sense of confidence that the government has found its mojo on privatization on the back of Air India, that after all these years of holding back, this investment will indeed go through with great purpose in fifth gear?
Well, that's the hope, as in, the Air India was a big positive surprise. And the real hope is that, that continues into FY23. Because to be honest, in FY22, other than Air India, we've got no other disinvestment done. So, that's really the hope. And actually, that's very important. It's actually connected to job creation. Let me explain why. My sense is that the best way to produce long-term, medium-term jobs is by continuing to do reforms in an economy which is supply-side constrained for many years. One reform is asset monetization, disinvestment, where you sell all the old assets which the government owns and you use that money to build new assets. This also becomes a form of job creation, particularly in urban areas where you don't have a social welfare scheme, getting somebody into a construction site to help make an important asset can be a form of job. So, that's one important reform. The second reform is financial sector reforms. My sense is, improving the balance sheets and the health of India's banks can have long-term implications. Today we all talk about giving some interest rate break or some sort of little subsidy to small and medium enterprises, but that doesn't assure growth in small firms. The big problem small firms have is that they don't get access to capital markets. They go to banks to get loans. And if banks are not in a good shape, banks are risk averse, banks don't lend adequately, then small firms don't grow. So financial sector reforms, things like strengthening the insolvency and bankruptcy code that can take care of bad loans piling up in the future. I think this is another reform that we should think about. Finally, on manufacturing jobs, look, we have something called the PLI. It worked well. A lot of people will tell you it did wonders for especially mobile handsets, and true, it did. But over time, is it losing focus? Was it meant to be an export promotion scheme, or was it meant to be an import substitution scheme? Because the truth is, we have been increasing import tariffs so much that today even the cost of our mobile phones are going up, and we are losing competitiveness in the export market. So we need clear thinking there. We think about the budget as a statement of accounts, but it's also a time in the year when you can think about the reforms you really want to pursue efficiently. And I think getting the asset monetization, disinvestment, cleaning up India's bank balance sheets for good, and also doing the PLI properly can be good reforms creating jobs over the medium term.
Okay, I'm going to slip into a very quick break. I'm quite enjoying this insightful conversation. Some sharp minds giving us their thoughts on the state of the Indian economy and what to expect in the union budget. We'll return on the other side of a very quick break. Stay with us. Back in...
Crypto Watch brought to you by BitBNS.
भटकने नहीं देंगे हम। जो असल मुद्दा है वो जब हमने जनता से पूछा तो देखे सियासतदान, सबसे बड़ा मुद्दा 35% कह रहे हैं बेरोजगारी है।
To know the answer of several such other questions, read the latest edition of India Today's exclusive Mood of the Nation poll. Subscribe to the India Today magazine now.
इंडिया टुडे सी वोटर सर्वे में हमने देश से पूछा वो था बेहतर प्रधानमंत्री कौन।
To know the answer of several such other questions, read the latest edition of India Today's exclusive Mood of the Nation poll. Subscribe to the India Today magazine now. India Today Roundtable Goa. Listen to leaders like Pramod Sawant, Arvind Kejriwal, Mahua Moitra, P. Chidambaram, Devendra Fadnavis, Sanjay Raut, Sudhin Dhavalikar, Vijay Sardesai, Utpal Parikar, Amit Palekar, Randeep Singh Surjewala, and many others only at India Today Roundtable Goa, 3rd February 2022.
The pandemic is far from over, so it's better to practice precaution to keep your family safe when you come home from outside. When you're heading out for essentials, it's important to wear a face mask or a face shield for, of course, personal protection and hygiene. Take precautions like social distancing and avoid contact with unclean surfaces. Disposable gloves can also be used to avoid direct contact with any potentially infected surfaces. If you don't have gloves, avoid touching your face completely while you're outside. And if you do, clean your hands with sanitizer. Upon returning home, remove your mask from behind and don't touch the front of the mask. Wash your hands thoroughly with soap and water. Disinfect your phone, your footwear worn outside, and keep it separate from others. If you wear at work, disinfect.
You're watching this special conversation on the State of the Union economy ahead of the Union budget. One of the positive signals that we're seeing is exports, which are currently at $393 billion, which is a record because they've been stagnant in the $250 to $330 billion range for about a year. I want to ask Neelkanth Mishra if he sees these increase in exports actually sustained, because a part of this is down to the revival in global goods trade. Indian trade could be more than 2%, as you've pointed out, of global trade. But do you see this sustain, Neelkanth, in the months to come?
Yeah, so you're right that global goods trade has revived. In fact, one of the implications of the helicopter distribution of cash in the US was that demand really went up very sharply, and that created what we call a supply chain bullwhip. So inventories were cleaned out, and then suddenly everyone felt there was a sense of shortage. They pulled forward demand, and then so global trade is currently perhaps higher than it needs to be. But remember that India's share, as you also observed, is still at about 2%. So the fact that we can go from 2% to 2.3%. So if you look at that $393 billion for CY21 and look at the last 3 months was $105 billion. So if you annualize that, it becomes $420 billion. So the momentum has been picking up, and there is now evidence clearly emerging, and we have documented that in segments like electronics, where we are starting off from a zero base effectively, and we are at 16 billion in CY21. If you annualize the last 3 months, is actually $20 billion. The government's target FY26, just 4 years out, is $110 billion. In apparel, as I mentioned earlier, it has gone from 32, 33 to 38. And just remember that China is ceding share because it's running out of workers. And that opportunity is upwards of $200 billion. And with the Xinjiang cotton ban, quite a bit of the action is actually starting to come to India. In specialty chemicals, the global share that India has been going up very steadily. It is now at about 3%, and we are starting to see very strong growth. So I do think that there are some very positive signals. These numbers should hold. There are other segments like steel, like some agri-commodities, where the prices may not be that sustainable. But at an aggregate level, if I was thinking 4 years out, it could add 2.5% of GDP. So just manufacturing exports, where we tap into global end demand, and a lot of this will be share gain. So we do not need global trade to keep rising at 3 to 4% like it has over the last decade. If we just keep gaining our share because we're starting from a low base, I think the opportunity for growth can be quite substantial.
Sourav, you've been looking very closely at the national monetization pipeline, the government's hope of using government assets, especially land, leasing them out or getting the private sector involved. It hasn't gone as per plan. Give our viewers a sense of the problems that the government's been facing in the bold announcements that have been made and the tardy execution that we're actually seeing.
Well, it's been a 6 lakh crore plan which has been laid out on the national monetization pipeline. But I think the basic idea which the government came out with, it's the execution challenge which is actually holding it back. Now, the economic survey mentions InvITs and stuff like that. But we need to actually see some work on the ground in terms of how it is being priced, how the assets are being priced, for longer term interest from people who are interested in investing in them. And as Dr. Ravi said also, and we discussed earlier, that these have significant job creation possibilities. So I think, it's all very well to lay down the pipeline and this 6 lakh crore. See what has happened on the disinvestment side, 1.75 lakh crore. We are here at about 9,300 odd crore as we speak. So I think, we would love to see much more action in this budget on that. It's not just the announcements of the big numbers, which has happened so far. Yes, Air India has been a big boost in terms of the signal it has sent that the government is serious about doing this. Today, Neelachal Ispat is another example, but we need to see much more. The whole mix of monetization, disinvestment, and privatization have to come together. Together, all the three of the legs have to start firing for us to make any meaningful headway on this front.
Well, then, the government's laying great emphasis on these production-linked incentives, the effort to try and wean manufacturing away from China. How, if you were to look at it in an overall sense, how effective has the government's efforts through these PLIs of trying to attract foreign investment into India, becoming a part of the global supply chain, really worked out?
I think the PLI is a good idea, Rahul, and I think it is working in certain instances. But my sense is that you don't need to, beyond the fact that you lay out the turf like PLI, you don't need to do too much for the corporate sector at this point in time. In fact, the one space which I would say needs the least bit of support from the government today is the corporate sector. You've reduced corporate income taxes to 25%. I mean, you've enabled manufacturing and many other facets through the PLI and other schemes. I don't think much needs to be done. I think the focus should be on the non-corporate side now in the budget and going forward, because that's really where the slack is for the Indian economy. So I would suggest that there are two aspects which need a lot of attention at this point in time, more than trying to incentivize manufacturing, which the corporate sector will do on its own in any case. One, I would say, is what you were discussing, all of you were discussing just a while back, is how to get more money into the kitty so that the fiscal space which the economic survey is talking about can be expanded, which is get to that 1.5-2 lakh crores of disinvestment every year. I mean, 2021 calendar was frankly a big miss, Rahul, because markets were so buoyant, yet you could not get BPCL done, yet you could not get the LIC IPO through. And this year, when there is so much volatility in the stock market, once again, globally and locally, you're going to try and push through all these divestments and these asset monetizations. These are best done on a sunny day, not on a rainy day. You've missed the sunny day. And I think what we are about to enter is rainy season when you're trying to do all these asset sales. And that might be a source of problem. But if you were to get the privatization and the asset monetization calendar going, then you would create a lot of fiscal space for yourself, which might be required for growth. And I will say one more thing, and this is important. You guys were talking about inflation earlier. I think this is one thing to keep an eye on this year. The fact that in previous years, we could talk more about fiscal space, government action, etc., because the monetary policy space was actually quite passive. The RBI was basically content to sit back and watch what everybody else, all the other actors were doing. But this is the year where inflation has raised its ugly head globally and locally, and monetary policy watchers or monetary policy actors will not be bystanders. So this is the year when RBI comes back into play, like the US Fed has, and that needs to be taken into the mix while we're talking about the budget, because this year is not going to be about fiscal policy alone. You need to give the RBI an exit from its loose monetary policy. Interest rates will go up, and that will have ramifications which are as equally important or as important at what might happen in the budget tomorrow.
Pranjul, but not just in India, even in the United States, the Federal Reserve has indicated that post-March, they will start pulling back on some of the measures which were rolled out on account of the pandemic. How do you see that impact, not just the stock markets, but the real economy, in terms of how that might impact India's growth prospects going forward?
Yeah, look, there are two things. One is India's own inflation, and I completely agree with Udayan that it's something we have to act upon and we have to keep a really watchful eye on. We have seen a lot of firm level inequality rising through the pandemic. A lot of small firms have been seeing high commodity prices. They are not being able to pass it on to the consumer. Once they start doing that, then core inflation could rise. On the other end of the spectrum, we have large firms who have become, larger through the pandemic, and they might be downward sticky. When commodity prices begin to fall, they may not cut prices as much. So from both ends, my sense is that there are upside risks on inflation, which we cannot ignore. And by the way, this is not just India. This is something that is going around the world. And when you mentioned Fed, this is exactly what even Fed is thinking about, that how do you control inflation and not let inflation expectations become runaway. So my sense is that, look, we should not just hike because the Fed is hiking, and that's something the RBI has actually made it very clear. We'll follow our own domestic path, but our own domestic path is also suggesting that we need to tighten monetary policy. We've seen inflation higher for longer. It became a global phenomenon in 2021, but our core inflation was elevated right through 2020. There has been a lot of inflationary pressures in the system. Inflation expectations are rising. And, I think RBI should not fall behind on this. They've done very well through the pandemic, but it's time for them to start gradually hiking rates. And if you don't do that, then, your question, what's the impact of Fed on India? Then at some point, if investors becomes, sort of selective across countries, which country has a macro house which is in order, then India may have to pay a price. Look, I'm not saying that will be the case, but it will be a good idea for the RBI to remain ahead of the curve.
Dr. Ravi, as we hopefully come towards the end of the pandemic, when you were to look back at the fiscal and monetary responses of different central governments the world over, where would India's response stand in terms of policy smarts in a global context?
Frankly, I think the word that captures the way we have performed, particularly fiscally, would be pragmatism. I'm glad we didn't follow the herd despite tremendous pressure of unleashing huge cash distribution in the form of UBI, etc. Simply because we have seen that when there is so much uncertainty in the market, then cash distribution of the kind that was being pushed really leads to heightened precautionary savings. When there's great uncertainty, people don't spend, they just hold on to the cash. So I think in that sense, they were pragmatic in really focusing on short-term humanitarian needs. So, just ramping up NREGS food grain distribution, just better targeting cash distribution to certain specific segments. I think we were pragmatic, Rahul. But I do want to make one point which we often miss, because you see the budget, every central scheme, because the budget is essentially fiscal policy and the strategy going forward for the year. Every large central scheme has an allocated X percentage, which is usually 5, to really look at what the impact of the scheme has been. Now we are well into, 8th year of the government. This is something we've been trying to push for quite some time as far as large schemes, some of our largest fiscal schemes, like the midday meal, the ICDS scheme, the National Health Mission. These have been running now for a decade and a half, 2 decades. It's about time we did a serious evaluation of how they're performing so that we can restructure some of them. Some of them are outdated. So I think the entire budget again is that opportunity to look at what the past spent has been in terms of its effectiveness. Then a small point on Sourav's comment on getting the right price when you privatize, that now we're likely to sell in rainy days, etc. So I think it's very important to look at the counterfactual. The right price also has to take into account reduced long-term short, losses that we are likely to continue making if we hold on to these some of these PSUs. So from that perspective, I think the kind of signaling that Air India has given, we really have to underscore that and say what a great job done. It is extremely difficult to privatize or sell some of these assets, as we are seeing in the case of some of the best decisions under the Vajpayee government. They are still, the entanglement as far as the judiciary is concerned, it's still on.
No, Dr. Ravi, in fact, if I may just interject here, I was talking about the right price from the buyer's perspective, from the investor's perspective, which is exactly what you're saying. And we need to also weigh it against the losses of how much longer we can bear that burden of that, underperforming asset.
Okay, so we've had a fascinating conversation. I have a Air India ticket booked this week, though. We're going for some election coverage once the budget is done to Goa. Looking forward to seeing the difference the Tatas are making, but that's just early days yet. You need to give them some time to settle into the cockpit. But Udayan and I will be back early in the morning. Udayan, what time do you start? 3:30 a.m. London time? That's a bit early, so you need to get to sleep and then wake up early for the budget coverage.
This is cruel of you, Rahul, to rub it in, the fact that I have to wake up at 3:30 in a cold January London morning, or if you can call it morning, but yes, I will be up at 3:30, and let's see what the budget does. I mean, you guys have spoken so much about it, but I think that all the people that we will speak to tomorrow will be clamoring for a lot of things, and they will be from the corporate sector mostly. But I think the finance minister should not focus on the formal economy this time around. She needs to focus on the informal economy tomorrow, because that is what is hurting. And it's also interesting that 5 of us spoke for an hour and the word education and health did not feature in the discussion. And this is my big grouse with these budgets, that they focus on what we consider hard infrastructure, but we never talk about the things which lie at the core of our jobs problem, which is education. And we saw what our health problems are like during the COVID time. I think these are the things government should be spending on, education and health, but they never feature in our budget discussions because they get such short shrift from the government, and that's a pity.
So we'll focus on a lot of the social sector schemes as well tomorrow, and on these key sectors in terms of the allocations that the government does make. And the point that Dr. Ravi makes, don't just look at how much money was allocated, look also at how efficiently that's being allocated, and whether at all, because the typical government action is to keep increasing allocations because that's what the populace demand is. But actually look very carefully at whether the money is being effectively used and channelize it where it's required the most, healthcare and education being critical at this juncture. Neelkanth Mishra, Pranjul Bhandari, Dr. Shamika Ravi. Dr. Ravi will be back as well early in the morning. So we're looking forward to having you as part of our budget panel tomorrow, and so will Sourav Majumdar. So I look forward to having all of you back. We start 7 a.m. This is India Today and Business Today's coverage of the booster short budget. So do tune in. You'll have Rajdeep, Udayan from London. We'll have Sourav, Siddharth Zarabi. So we have big plans. International perspective, domestic insights, lots of very, very sharp voices in our coverage all through the day. Rajdeep Sardesai comes up next with News Today. Stay with us.
भटकने नहीं देंगे हम। जो असल मुद्दा है वो जब हमने जनता से पूछा तो देखे सियासतदां, सबसे बड़ा मुद्दा 35% कह रहे हैं बेरोजगारी है।
To know the answer of several such other questions, read the latest edition of India Today's exclusive Mood of the Nation poll. Subscribe to the India Today magazine now.
इंडिया टुडे सी वोटर सर्वे में हमने देश से पूछा वो था बेहतर प्रधानमंत्री कौन।
To know the answer of several such other questions, read the latest edition of India Today's exclusive Mood of the Nation poll. Subscribe to the India Today magazine now. India Today Roundtable Goa. Listen to leaders like Pramod Sawant, Arvind Kejriwal, Mahua Moitra, P. Chidambaram, Devendra Fadnavis, Sanjay Raut, Sudhin Dhavalikar, Vijay Sardesai, Utpal Parikar, Amit Palekar, Randeep Singh Surjewala, and many others only at India Today Roundtable Goa, 3rd February 2022.
Virtual tourism is not something new. It's been there in the tourism world for many decades now. It's very prevalent in the US market from the 90s onwards. in this pandemic, people have not been able to travel. So our effort has been to give them the comfort of traveling virtually to as many places as they want to and trying to experience those environments. It's been overwhelming for us. Business has improved. We've been very busy on that. So virtual tourism, the moment you said tourism, I mean, everything and anything under the sun can be showcased. And especially considering our country, which is such an expanse from north to south, east to west, and where you have the entire climatic conditions world over available in just our country alone, starting from Kanyakumari's beaches to the snow-clad mountains of Kashmir and to the Ran of Kutch to the ever-raining Cherrapunji or the Mysore. There's been tremendous things which you could do. The simplest form being, you could actually see it on your desktop, you could see it on your mobile phone also. The next step, we can give them goggles, wherein you have a left eye, right eye vision. It will be more realistic. The next level is what you talk about, wherein the user himself is given a remote control, wherein you can actually navigate at your own convenience and comfort. That level is called the Oculus or the Metaverse, wherein the virtual element can be brought into the real environment. This technology encompasses a multi-stepped approach wherein we physically shoot the premise, wherein we use a different kind of a lens. I mean, not the conventional camera lenses, because
यूपी में सबसे बड़ा मुद्दा भटकने नहीं देंगे हम। जो असल मुद्दा है वो जब हमने जनता से पूछा तो देखे सियासतदां, सबसे बड़ा मुद्दा 35% कह रहे हैं बेरोजगारी है।
To know the answer of several such other questions, read the latest edition of India Today's exclusive Mood of the Nation poll. Subscribe to the India Today magazine now.
इंडिया टुडे सी वोटर सर्वे में हमने देश से पूछा वो था बेहतर प्रधानमंत्री कौन।
To know the answer of several such other questions, read the latest edition of India Today's exclusive Mood of the Nation poll. Subscribe to the India Today magazine now. India Today Roundtable Goa. Listen to leaders like Pramod Sawant, Arvind Kejriwal, Mahua Moita.
Presented by Star Health Insurance, the health insurance specialist. Co-presented by JK Smart Tire, tire with a brain. Powered by Greenply, India's first zero-emission plywood. Powered by Farm Easy, don't take it easy. In association with अब पढ़ाई के लिए सिर्फ extra marks.
Good evening, hello and welcome. You're with the news today. This is your primetime destination news. Newsmakers, talking points. It's the day ahead of Budget 2022. All eyes today were on the economic survey. We'll decode that with a special panel of guests. But first, as always, the 9 headlines at 9 tonight. India all set for the Modi government's 10th union budget tomorrow. Economic survey 22-23 pegs GDP growth at 8 to 8.5%. Claims the economy is now at the pre-pandemic level. The bulls are back on Dalal Street. Market logs its best day in 3 weeks ahead of the union budget. Sensex ends above the 58,000 mark. Budget session begins with furor over Pegasus in Parliament. Congress accuses IT Minister of lying. Government rejects charge, says Supreme Court investigation underway. Opposition likely to move a privilege motion on Wednesday. BJP springs a last-minute surprise. Union Minister SP Baghel to take on Akhilesh Yadav and Karhal. Both filed their nominations for the state of war, Uttar Pradesh. Election Commission extends the ban on poll rallies and road shows till the 11th of February. Norms for public meeting and door-to-door campaign to be relaxed. 1,000 people can now attend outdoor gatherings. Big embarrassment for the Stalin government in Tamil Nadu. Madras High Court transfers Thanjavur student suicide case to CBI after a massive outcry for justice. Bengal Chief Minister Mamata Banerjee blocks Governor Dhankar on Twitter, accuses him of blocking her government's policies. Didi asked Prime Minister Modi to remove the governor from his post. Big controversy over Pakistan Prime Minister Imran Khan's fresh pick for Pak envoy to the US. Pressure mounts on Joe Biden to block the appointment of alleged terror sympathizer Masood Khan as ambassador. An Indian hockey goalkeeper PR Srijesh wins the prestigious World Games Athlete of the Year award. Srijesh, second Indian to receive the accolade after women's hockey captain Rani Rampal in 2020. But first today, all eyes on the economic survey, which gives the government's blueprint for the economy ahead of Budget 2022. The key takeaways. According to the economic survey, the Indian economy is now at the pre-pandemic level. An 8 to 8.5% growth forecast in 22-23, 9.2% growth in 21-22, 11.8% industrial sector growth in financial year 22, 8.2% service sector growth, still to reach pre-COVID level here. Private consumption yet to hit pre-COVID level, but by and large, what is being suggested is the worst is over after 2 years of the pandemic. Ahead of the union budget, the government tabled the economic survey in Parliament. The survey has projected, as I said, an 8 to 8.5% growth forecast in 22-23. It says that the Indian economy is not yet at pre-pandemic level, with private consumption in particular not hitting the levels it was before the pandemic occurred in March 2020. Just what does this economic survey mean? We'll have a discussion on that in a moment, but first, take a look at our top story.
The Economic Survey 2021-22, tabled in Parliament on Monday, gives many reasons to cheer and few to worry. The good news first. The Indian economy is back at pre-pandemic level. The growth of 2021-22 is pegged at 9.2%, coming after the minus 7.3 seen the previous year and 4% in 2019 to 2020. The survey says the GDP is now 1.3%, more than what it was before COVID. The 67% jump in revenues during April to November compared with the same period last year means the government has elbow room to manage its finances.
We expect that there will be a fairly robust growth into the next year, and we forecast that India's GDP will grow in real terms by 8 to 8.5% in 22-23. The economy is in a good place to grow strongly into the next year or two, and all the macro stability indicators suggest that there is a fair amount of buffer.
Now the big concern. The survey has red-flagged the rising global inflation. The global oil prices have crossed $90 per barrel. Consumer inflation in the US has reached 7%, the highest since 1982. While the retail inflation in India is within the RBI target of 5.6%, global prices could affect us too.
WPI has popped back up and is in double digits. Now, some of that, of course, is a reflection of the low base from last year. So that will, of course, wear itself out. But we do need to be concerned here in India about the fact that there is significant imported inflation, particularly from energy prices, that will be something we need to watch out for.
Experts expect government to continue its support measures in this budget too.
The three most important issues are demand generation, unemployment and inflation. If they focus on these three in the coming year, I think they're going to be a lot better off. However, the 300 million middle class, which has been left alone, needs attention in this year. They are the true demand generators.
The survey has highlighted the role of vaccination in recovery. It says a rapid pace of vaccination will lead to faster normalization of economic activity. The survey has also defended the government's policy of supply-side support, saying measures to increase demand on its own won't help given the unpredictability of the pandemic. Bureau Report, India Today.
So is the economy out of the woods? Is the worst over for the Indian economy as we look ahead to budget 2022? But is the recovery uneven on the other hand? Are we not seeing a V-shaped recovery, but as they now say, a W-shaped recovery? What are the biggest concerns as we look at the budget tomorrow? How do you fight rising inequality? Is that really the critical question? Is India better placed to tackle any disruption today than we were 2 years ago? Just some of the questions that we're going to raise tonight. But the primary question is simply that. Is the worst over? Are we really on the road to recovery? Joining me now is Dr. Pranjul Sen, former Chief Statistician, for Program Director at IGC, someone who's been a critic of the government. We'll also be joined in a moment by Dr. Rajiv Kumar, Vice Chairman of Niti Aayog, will join us. Madan Sabnavis is Chief Economist at Bank of Baroda. Shankar Iyer is a writer, author, journalist and someone who tracks the economy closely. S.C. Garg, former Finance Secretary, is with us. Professor Arun Kumar, who has from JNU and has been again a critic of the government, but we've got therefore those who have been supportive of the government's measures as well as critics joining us, and Dr. Rajiv Kumar joins us in a short while. Pranjul Sen, let me come to you, former Chief Statistician of the government. Your sense from the economic survey as you saw it today, is the survey giving you a sense that the economy is in good health, that we are back to pre-pandemic levels? Or is the government in a sense hiding some of the worst aspects of what has gone wrong? Do you believe that there is still a concern because growth in particular appears uneven across sectors?
Well, you know, what they have done in the economic survey is faithfully reproduce what the National Statistics Office brought out in their estimates of the national accounts for the current year. So these are the first advanced estimates. Now, one would have expected a little bit more from the economic survey than just that, because the statisticians are being true to their nature, but the economic survey, I think, has to be a lot more nuanced. Unfortunately, I don't think much of that has happened. So there has been recognition, for instance, of weak consumption, but there doesn't seem to be any analysis of why the consumption is weak and what it really means for the future of the economy.
So according to you, the big concern that emerges out of this economic survey, because you've been critical in the recent times, particularly with the lack of attention, as you've been saying, that is being paid, according to you, to the informal sector, the fact that micro and small and medium enterprises continue to hurt. What is that big red flag that you find in this survey that should worry us?
Well, the big red flag, Rajdeep, is that doesn't seem to have been recognized as the single largest problem that we face today. So if you look at the issues that they have expressed concern about, inflation, what is going to happen in the global economy, particularly as the US starts rolling back the fiscal stimulus, the monetary stimulus. So all of these are flagged, and they're important issues, mind you. But the big issue in the Indian context is the weakness in the informal and the small and micro and small enterprises. That does not seem to have been flagged, and unless an issue is flagged, it's not going to be addressed.
Right. SC Garg, your big takeaway from this economic survey, you've been someone who's tracked this government. What's the big positive that you're seeing?
See, first thing, the positive is that we are back to the normal, we are at the pre-COVID level. So that's one comfort in my judgment. But let's remember that even before the COVID struck us, in 1920, we grew only at sub 4% level. So in 3 years put together of the government, we have now grown average at 2% per annum. That's a very, very low growth. Now, the second thing, which is a positive thing, the confidence that the government has said that it can grow 8 to 8.5% next year. But the confidence is based on what factors? That analysis is missing. It's only some caveats that if these things don't happen, we will grow. But is there a reform agenda for putting the economy back? Is there a demand agenda? Is there a way, how do we control the inflation? So those things are missing. The survey is more like a report of the status than a strategy or a policy choice of how we can put India back on a sustainable high growth path. I think that's missing, and that's a big risk.
Let me take what you've just said to Dr. Rajiv Kumar, Vice Chairman, Niti Aayog joins me at this moment. Appreciate your joining us, Dr. Rajiv Kumar. A lot of attention is being focused on the big number that we are back to pre-pandemic levels. The latest economic survey had projected the economic growth at 8 to 8.5%. But often these targets are missed. You might remember that the last economic survey projected economic growth for 2021-22 at 11%. Now the estimated growth is 9.2%. The economy contracted by 7.3% during 2021 as against the projection of 6 to 6.5% in the economic survey. So when today the economic survey projects GDP at 8 to 8.5%, are you optimistic that we will meet this target?
It is great to be here, but let me start off by pointing out that the IMF has projected India's growth rate in FY23 at 9%. And earlier in a program, actually on India Today, I was told that these growth estimates are conservative. And other multilateral agencies are also talking about the same level. Now, I heard Subhash saying as to what these were based on, and the survey actually lays down that. It lays down that there are several factors which have improved. For example, the financial sector, now the banks are much better capitalized. Their capital adequacy ratio is much higher. Their NPAs and both gross and net are much lower. So they're ready to lend. Credit to non-food sectors has risen finally, as rising now, and having hit a bottom a couple of years ago. The consumption demand is hopefully going to improve with the showing of agriculture, and therefore there are there is some talk about improvement in rural demand as well for that, and most importantly, the government has shown its commitment to ramping up public capital expenditure, 15% growth last year, and a commitment to do same. And this is what the economic survey talks about, that growth of infrastructure through public capex will help both the demand and the supply side by removing the supply side bottlenecks. So, then finally the exports. That there are more than 300 billion April to December. The global economy looks quite good still, and therefore, that tide is still fairly high, so our exports can continue to do better. These are, I think, sufficient factors to base your estimates of 8.5% growth rate, especially when others expect us to grow even higher at a faster rate.
You know, the reason as I said, in recent years, the government has missed the targets. There was the pandemic that sort of shook the economy in a way. The economic survey, Dr. Kumar, presents the rosy picture. Exports doing well, for example. The fiscal situation is good. But the deep concerns, underlying concerns about unemployment, 84% of households have lost their incomes or there's been a decline in incomes in the last 2 years. We still don't know how that's going to be addressed. And the big key question of how private investment and consumption in particular is going to revive to the levels of pre-pandemic India. As I said, is the survey presenting a slightly rosy picture in what is actually very difficult times, Dr. Kumar?
Well, the times are difficult, and the times are faced with laced and faced with uncertainty, which the economic survey points out that we are living in times faced with significant uncertainty. And it also talks about, there is a clear statement in the first chapter itself about the consumption weakness, that there remains a consumption weakness which has to be taken care of. Now, the consumption one part of the government that the government has done already is to take care of that by transferring, I think it's 1.8 lakh crore under Pradhan Mantri Kisan Samman Nidhi to the 11 crore farming households. That's one part of it. So that's direct transfer. On the other hand, it's also committed to ramping up, as I said earlier, the capital expenditure and build up the infrastructure and the housing sector, which will generate sustainable employment. Now, the other part could have been, and people can argue that the services sector, which were the hardest hit, could be given some direct transfer, some direct support, because that's also where the largest number of informal sector workers are, and they have of course suffered during the pandemic. And maybe we don't know. Let's see what the budget holds tomorrow. By the way, it's not economic survey's job to lay down policies. It's the budget's job. And the economic survey lays the background for that by providing us all the analytics and the trends and the background for that. And this, I think, all the people on your panel that I see are so well versed in this that they would know this, that the economic survey is a document of record and is a document which provides the backdrop for the budget to then announce policy initiatives on.
Let me just quote, if you would, what former Finance Minister P. Chidambaram has just said. He says the economic survey repeats ad nauseum that at the end of 21-22, the economy would have recovered to pre-pandemic levels. It means in plain language that on 31/3/2022, the GDP will be back at the same level as it was on 31/3/2020. It means that it has taken 2 years to go back to where we were. How do you respond? That's the glass half empty view, that we are virtually still where we were 2 years ago, and we are celebrating that.
I would have expected Mr. Chidambaram, knowing how an astute finance person is, to make a much more reasonable comment on that. Of course, we know that the 2 years we have lost the growth, but the fact is that we are still, and as I think Subhash Garg pointed out, will be thankfully 2% higher than what we were at the end of March 20, the fiscal year 1920, and not at the same level. Of course we have. And would anybody have done differently in the pandemic years? The best of the global economies have suffered. It was an external shock of unforeseen and historical proportions. And the fact is that our recovery in the second half of 2021 has been the smartest. And we will, I don't like saying this very often, but we will remain the fastest growing large economy in the world going forward. So the fact is that Mr. Chidambaram should recognize the nature of shock that we faced. And he would recollect how he responded to the shock of the 2008-2009 global financial crisis by opening up the sort of taps for extra spending, which then caused runaway inflation. This government doesn't want to do that. This government doesn't want to, let inflation rip, and this government is in the business of sorting out, addressing supply side bottlenecks, improve logistics, improve productivity, improve competitiveness, so that we can get sustained employment generation as we go forward. But to say that after 2 years we're still at the same level, I think is not expected of a former finance minister.
So let me ask you in conclusion, Dr. Kumar, looking ahead to tomorrow's budget, the big challenge, what is that one big thing that you believe is the biggest challenge facing the finance minister tomorrow?
The biggest challenge, if your permission, may I mention two, is to ensure that private investment kicks off and responds and then rises to the level that it should or it can, and that's what the big challenge is, because that is this government is committed to a private sector-led growth in the economy. And the second one, of course, is employment, which is that we need to generate employment at the higher rate you can get in the sectors like construction, housing, exports of labor-intensive products, agriculture, the better off we would be, and that's what is required. So those are the two challenges that, in my view, the finance minister will address in the budget tomorrow.
Dr. Kumar, as always, pleasure talking to you. Thank you very much for giving us your perspective from your vantage point as at Niti Aayog. Thanks very much for joining me this evening. Let's then reflect upon what the government is saying and what the critics are saying. Shankar Iyer, it appears that the government believes that the worst is over. They are pointing to buoyant exports, to a strong fiscal situation as a sign that the Indian economy is far better placed today than it was certainly a year ago. The critics are saying that there are serious issues still to be addressed, particularly when it comes to jobs, when it comes to private consumption. Where do you stand?
Well, certainly the economy is better placed than it was 6 months back, or 12 months back, or even, dare I say, 24 months back. You would know that India's economy moved from slowdown to lockdown, and then to contraction, and now to recovery. So this is a long path. Like what Pranab Sen said, my worry about the economic survey is what it doesn't mention. So we don't know in 2021, forget this year, in 2020-21, what was the household savings, what was the gross capital formation. So the data of that level. So the big worry for the government should be that gross savings is still low, gross capital formation is still low. And there is much talk about how we will boost growth through infrastructure and spending. So Rajdeep, 2/3 of the spending in India GDP is done, rather 2/3 of government spending in India is done by the state governments. State governments and governments in general at large are sitting with over 4.5 lakh crores, depending on whose estimates you do. So why is the government borrowing at 6.7% and sitting on roughly 5 lakh crores? I mean, even if I leave out the central government. So the question that the government and the budget needs to address is, why aren't state governments spending the money that they have borrowed or are they sitting on? Is that the state government doesn't have avenues to spend on? There are roughly 45,000 vacancies in the health sector, 5 lakh vacancies in the teaching education sector. The 1/5 of the posts in police personnel are vacant. Are the state governments saying that there is no scope for addressing these issues? You know what has happened to education in the pandemic. So the question that, the data point that I would like to see in the economic survey henceforth is, what is the amount of cash that state governments are spending in? Certainly the central government knows that amount, and I hope the finance minister highlights this amount. The second point is that, why aren't state governments spending the money that has been raised? I mean, they are getting a free pass in this whole system because we are so centralized. I think the big challenge for the budget is not to fall for the temptation of let's do something. If they don't do anything, let the invisible hand in the economy play out. I think we would be far better, in a far better place next year at this time than we are now. I think this temptation to do something, to create an expenditure tax, to stimulate the bottom of the pyramid, all of these, I hope they're not happening, and that tomorrow's budget is a very boring budget, so that we are not sort of analyzing that which shouldn't have happened.
Interesting. You're saying the more boring the budget is tomorrow, the better it is. Don't tinker around. This is not a time to be playing tinker woman or tinker man, as it may. Dr. Sabnavis, your view, looking ahead, seeing what the economic survey has, the government fiscal position seems very good. That gives the government possibly a lot of elbow room to stimulate investment even further. What's your sense from the economic survey?
The sense I get is that when we are saying that the GDP is going to grow by 8 to 8.5%, that is going to be the base on which all the fiscal numbers come about. So I think the robustness which we are talking of in expected GDP growth, which I think is fairly reasonable at 8 to 8.5%, even though we at Bank of Baroda are looking at a number of 7.5%, but I go with the view that we have taken some part between the 7.5% and the 9%. We are actually talking of something like 13.5% growth in nominal GDP, which means that the tax revenue is going to be buoyant. And given the fact that they're going to work on the basis of the resources which are available, we may not be having the luxury of the disinvestment, because going by the government's reports, they're saying that the 1 lakh crores will materialize, in which case I will not be getting this 1 lakh crores next year. So this actually means that the government will have to fine-tune the expenditure to the revenue. And I think that's why I think that there's going to be a focus on capital expenditure. But we should remember one thing, Rajdeep, that capital expenditure of the government cannot move the economy. We need to have the private sector also come in, because we are talking of capital formation of around 70-75 lakh crores. 5.5 lakh crores cannot drive 75 lakh crores. States need to spend, the private sector needs to spend, and I think the budget can only provide a kind of incentives. I think one thing which we always get carried away is we think that the budget is a panacea for all our problems. Employment should be taken care of, agriculture should grow, SME should grow, so on and so forth. I think we should look at the policy packages which have been there for the last 2 years. They have been very reasonable and they have been helping industry, SMEs in different ways. Right. So the actual push which is going to come from here, given the fact that we have to look after the concerns of farmers, we have to look at Nariga, the free food which is being given, which have to extend for some point of time. I think we should be a bit moderate in terms of our expectations. The government will do something on capex, and I think that is something which should be taken on by the private sector so that we are able to have this virtuous cycle of investment started.
You know, Professor Arun Kumar, you're on the other hand the complete skeptic of this government. You've been very critical of their policies. You've claimed that this whole talk of a V-shaped recovery doesn't take into account the fact that there are several sectors hurting, especially informal sector. Given what you've seen in the survey, do you believe that the finance minister has a lot of elbow room tomorrow to ensure an element of correction in this uneven growth, particularly reaching out to those who've been hurt the most by the pandemic?
So, you know, Rajdeep, if you look at the CGA report of November, what you find is the expenditures by the government are far lagging compared to what they should have been at this stage of the game. Especially capital expenditures, only 49.4% of the total target for the year. And the fiscal deficit is way down at 46.2%, you know, in November end. Now, there are 4 months left after November, and this can't catch up. So, you know, the point I'm trying to make is that the demand generation from the budget has been lagging behind in the economy. Mm-hmm. And that's why I think, you know, the organized sector itself has just about reached the Q2 level of 2019. There also, you know, if you look at the Q2 data that was presented some time back, consumption is lagging, both government and private consumption. So unless the government begins to increase expenditures, you know, where would the boost come from? Because exports by themselves are not going to boost it, because we have to look at the gap between the imports and the exports. That is what gives a boost to the economy. So by itself, it's not the case. So I don't think the rate of growth of the economy is 9.2%. It's actually much less. Mm-hmm. And I don't think next year it'll grow at 8.4%. it'll probably be growing at much less than 8.4%, unless the government begins to increase its expenditure, both capital expenditure and other expenditures. If you look at the budget that was presented for this year, the increase in the total expenditure was barely 1% over the revised estimate. So even that is not being achieved as far as the data to November is concerned. So I'm quite worried, that what the government is doing is unlikely to give the kind of boost that is required, because as people have been discussing, we need.
Let Mr. Garg respond to that. Mr. Garg, do you believe that the government could do much more in terms of expenditure to kickstart the economy, to push the growth, to create jobs, critically to create jobs, to reduce inequalities?
I think first there's been a lot of talk about 2 points. One, that the government has a lot of fiscal space which can be used for expenditure. And second, the government has done very well in capital expenditure. I think both of these things are important to answer what the government can do further. The fact that Mr. Arun Kumar pointed out that in 8 months, we have 2.75 lakh crores of the capital expenditure out of 5.5 lakh crore of budget, less than 50%. And if you look at the trend in last few months, this is actually declining. So my sense is that when this year ends, you would not be able to do 5.5 lakh crore of capital expenditure, right? So placing too much hope on capital expenditure is perhaps misplaced. Then one thing we should also remember, that the capex of the government, basically in the transport sector, railways and highways, is largely funded from the excise revenues and what we call CRIF, this Central Road and Infrastructure Fund. Now that has peaked in the year 2021-22. With the global oil prices being very high, the government is under pressure, and it's already reduced the excise duties and taxes on the diesel and petrol. And going forward, perhaps it will have to do a little more. If that is what continues, the resource to fund the capital expenditure for the next year will actually not be available. So I would actually be seeing how the finance minister puts up the capex target for the next year. It will be very challenging because from the normal budget, you can't find resource to fund the capex. Now, about the fiscal space, it's true, it's good that there has been good sort of recovery on taxes, especially on the corporate taxes and the personal income taxes. But again, if you look at the trend in last quarter, the results for which are coming up, the corporate revenues are also sort of tapering off. And we in 18-19, we had the corporate taxes of 6.7 lakh crores. This year, our budget target is only 5.7 lakh crores. We are even 3 years before corporate tax record, and we are borrowing 15 lakh crores for spending. Now, any fiscal space created by so much of borrowing in a situation where the inflation is high and the global demand, which came in the form of the exports, is now tapering off. So this year, in 21, the global exports grew by 10%. Next year, they are expected to grow only by 4 to 5%. And therefore, your export growth will not actually be happening next year as much as we do. So I see enormous challenges. Then we have also domestic challenges. For example, food subsidy is threatening to now go to 4 lakh crores. So I see a lot of fiscal constraint in the hands of government to sort of spend its way to prosperity or growth.
Let me take that to Dr. Sen, because the government in the economic survey on the positive side is pointing to the buoyancy in tax collections. They're pointing to the buoyancy in exports, seemingly suggesting that the second wave last year had a much milder effect on the economy than the first. So with the fiscal situation under control, exports up, is that the big positive that you would take away? Does the government have reason to believe that we can create export-led growth, or are there limits, as Mr. Garg here suggested?
Raj, the big positives are, first is that the fiscal numbers look very good. I mean, I don't think the finance ministry even expected these kinds of numbers. So that's a big plus. The second, of course, as they're flagged, our exports have done very well. And hopefully, if the global economy recovers rapidly from the Omicron effect, exports will continue to do well. Whether they'll touch $400 billion, I don't know. But exports are doing well and should continue to do well. The point really is that you have to, in something like the economic survey, you have to ask what the causes of this are. Is it that Indian exports are doing well because Indian exporters are not finding a domestic market because consumption is too weak? In which case, the implication would be that as the Indian economy starts moving, exports may actually slow down quite dramatically. These are the kinds of issues that the economic survey should be talking about. Or for that matter, if you're looking at the fiscal numbers, there's been a massive increase in tax receipts. Is that because there's been huge growth in the economy and everybody is richer? Or is it because that those who pay taxes are richer and those who don't pay taxes are not? And the kind of actions you take would really depend upon what your diagnosis is.
In a sense, Dr. Sen, you're pointing out to the real concern, which is growing inequalities. As I said earlier, 84% of household incomes have declined in these pandemic years. Do you believe that's the major challenge going ahead for the finance minister, finding ways in which we can reduce inequalities at the moment, in the times in which we are?
You're absolutely right, Rajneet. That is my primary concern. And that, frankly, should be everybody's concern. Mm-hmm. Because, at the end of the day, the budget is about the welfare of our people. Mm-hmm. Now, what should be done is really a more difficult question. Economists can and will disagree, but at least let's get the diagnosis on the same page. Now, if these kinds of inequality numbers that are coming up, and mind you, the surveys that have been projecting this, the price survey and so on, I am not sure about the quality, but there is just too much of evidence that's coming out which suggests that significantly. Mm-hmm. Now, for the government to address the problem of inequality is not easy, and it is certainly not a short-term game. Inequality can only be addressed very gradually over an extended period of time, but a game plan has to be laid out. I'm not even sure that particular mode of thought exists in the finance ministry at the moment.
That's a very serious comment you're making, that there isn't clarity on how are you going to reduce inequalities. Shankar Iyer, you agree with that is the big challenge of our times? It's the challenge globally, but it certainly is a challenge in a country like India at the moment.
Absolutely. I think there is a lesson why the 11th letter of the alphabet K has been used to describe how the economy is recovering. So, the V-shaped recovery is a no-brainer, because if you dive deep into the pool, you are going to come up straight up. So that's not the question. The question is how the economy is recovering post the pandemic. And there is absolutely no doubt that there has been a clear bipolar recovery of the economy. I reserve, the right to prevent the government from addressing, or the budget from addressing what are demand side issues. I think governments over the past 70 years have been very poor at addressing the issue of inequality. I think what needs to be addressed is what is the central cause of inequality is the asymmetry in opportunity and skills. So that is what the government should have addressed. If 2 years your school children in government schools do not have teachers or classes, you're going to have a big problem ahead. If over 6 lakh villages have 1 lakh primary health centers or community care centers, you are going to have a problem ahead. If your average years in school is going to be 5 years or 3 years in parts of India, you are going to have a problem. If your average per capita income is Bihar is half of that of UP and UP is that half of that of all India, you are going to have an inequality problem. The issue is that how the government should address all the friction points in the economy. Just liberate the friction points, enable people to do their thing, and private people, private economy is smarter than public policy. So they will work around that. I think that the inequality issue is very, very serious, and you can figure this out from the language of the campaign in the 5 poll-bound states, Rajdeep. The number of visits that it is taking ruling party or other parties to deal with it.
Right.
And the central theme in India's economy is if nearly half the population is dependent on 1/6 of the economy, which is the agriculture sector, you have a long-term problem that you need to address, which means you move people from farms to urban economy, and that intersection you'll have to work a little harder. The demand on Narega shows the distress in the economy. The number of jobs lost shows. So the government, if it just reduces the friction points, makes more credit available to micro and small enterprises, good. Allows people to run homebound businesses, good. Allows professionals to do services from home, good. And bring down the burden of GST on the service sector, which is where the growth can come. Right. You can't have 18% service tax on people and then go around saying that we are a startup economy, we are going to do services-bound economy. There's something contradictory about the high level of GST imposed on self-employed professionals or businesses. These things are the things that the budget needs to address. I do hope there are no new welfare schemes because the government is very bad, has a very poor track record at addressing the demand side issues. I do hope the finance minister finds a minute to tell the states that they have not been doing their job.
Okay. Let me quickly get in Dr. Sabnavis for a last word. Dr. Sabnavis, you've just heard Shankar Iyer saying the government itself needs to stay out of these large welfare schemes. Instead, allow in a way individuals, professionals, the private sector to find its own ways by interfering less, by tinkering less. You agree?
No, actually, I have a different view, Rajdeep. First, on the issue of inequality, I think expecting the budget to address the issue of inequality, I think is quite ridiculous. I agree, inequality is a major problem for us. You address it by creating more jobs. A budget is an income and expenditure statement of the government of India or of the state governments. Now, expecting that to take care of an equality problem, to my mind, is not being fair. I don't think governments can do that.
No, it's not about the budget, but it's about recognizing it. It's at least the recognition. Today's economic survey also doesn't seem to recognize the nature of the problem.
See, Rajdeep, the thing is that we have something called a PM Kisan. We have subsidies. We have a good number of economists who keep saying you should not be giving subsidies. Now, where does the government end? You have a Narega program. You have the free cash which is being given, free food being given. So I think the government is being fairly progressive when it comes to trying to help out the poor. But inequality cannot be gotten rid of in a budget. We have the states who have to work. Now, we spoke of education and health. There are also issues, there are also concurrent subjects. So the state governments also need to spend on it. If the states are not doing, we cannot expect the center to do it. So what I'm trying to say is that we need to be a bit rational when we're talking of the budget. It's an income expenditure statement. If I earn X amount of rupees, I can spend only X amount of rupees. So maybe why, and there's a certain amount of borrowing, it has repercussions everywhere. So I just say that we need to moderate our expectations from the budget and our demands from the expectation. And let's not just criticize for the sake of criticizing, because the moment I run a high fiscal deficit, I mean, the same 6 of us are going to come here and say that, look, we're ruining the economy. It's going to lead to hyperinflation, Venezuela, Zimbabwe. I think let's strike a balance, sir.
I just have 30 seconds, Professor Arun Kumar, very quickly. Your final prescription?
Yeah, so I think what we are doing is we are mixing up the long term with the short term. Nobody is saying that inequality can be eliminated immediately, but just let's take the example of education. Large number of people who've lost incomes, they've pulled their children out of schools, they've pulled their children out of private schools and sent to government schools. So unless government steps in and spends a lot more on education and better education, as Shankar rightly pointed out, the education quality is abysmal. Similarly, the health quality is abysmal. Do we expect the private sector to set up clinics and hospitals in the rural areas, etc.? So government definitely has a role. It's not simply that the budget is an accounting thing. Budget fuels policies, policies that have been existing. If it fuels one that, as compared to the other, then the priorities change. So budgets do change priorities. Budgets do mean that policies can be better implemented. Policies which are different, which have not been implemented, they can be brought on the anvil. Right. So government has a role. And government must play a role because given the inequality and the poverty increasing in the country, as the data seems to suggest, I think if the government doesn't play that role, we have a social explosion coming.
On that sobering note, I just want to thank each and every one of you. We'll have many more of your thoughts tomorrow on Budget Day. We'll have a stellar panel of many more guests joining us. It starts 7 a.m. onwards here on India Today, where we also bring in the Business Today team. Experts who've been tracking budgets for decades, giving you their experience and their insights. So look forward to that. All eyes on Finance Minister Nirmala Sitharaman as she delivers her 2022 budget. We'll see whether this budget can offer a kickstart to the economy that it so desperately needs, or whether it simply remains a case of managing the crisis that we faced over the last 24 months. Thanks for watching. Stay well, stay safe. Good night. Shubh Ratri.
India Today Roundtable Goa. Listen to leaders like Pramod Sawant, Arvind Kejriwal, Mahua Moitra, P. Chidambaram, Devendra Fadnavis, Sanjay Raut, Sudhin Dhavalikar, Vijay Sardesai, Utpal Parikar, Amit Palekar, Randeep Singh Surjewala, and many others only at India Today Roundtable Goa, 3rd February 2022. India Today Roundtable Goa. Listen to leaders like Pramod Sawant, Arvind Kejriwal, Mahua Moitra, P. Chidambaram, Devendra Fadnavis, Sanjay Raut, Sudhin Dhavalikar, Vijay Sardesai, Utpal Parikar, Amit Palekar, Randeep Singh Surjewala, and many others only at India Today Roundtable Goa, 3rd February 2022.
You are watching
India Today Roundtable Goa. Listen to leaders like Pramod Sawant, Arvind Kejriwal, Mahua Moitra, P. Chidambaram, Devendra Fadnavis, Sanjay Raut, Sudhin Dhavalikar, Vijay Sardesai, Utpal Parikar, Amit Palekar, Randeep Singh Surjewala, and many others only at India Today Roundtable Goa, 3rd February 2022.
How to vote if you are away from your voting booth. Are you wondering if you can vote in the elections if you're not at home and unable to travel on the election day? Well, you're not the only one. According to the 2011 census report, there are around 450 million internal migrants, which constitute to about 37% of the total Indian population. An internal migrant is basically someone who has moved from one place to another for either education, livelihood, or other reasons. These people cannot vote because of time and money factor. They're, of course, unable to travel back home during elections, and their votes go uncounted most often. So what is the solution here for this? Let's try and understand. There are two ways to cross this hurdle. One is the online process. For this, firstly, get your name enrolled in the constituency that you've moved to, then file the application in prescribed form number 6. Now, form 6 is basically an application for including your name in the electoral list. You can get this form from the website of the Chief Electoral Officer of your concerned state or from the website of the Election Commission of India. Now, the documents that are required for online process. For the online process, you will need a passport-size colored photograph and photocopies of documentary proof of age and address proof. Now, the age proof can include mark sheets of classes 10, 8 and 5, Indian passport, of course, PAN card, your driving license or Aadhaar card. And address proof. Address proof includes passport, license, passbook, ration card, IT assessment order, rent, water, telephone, electricity or gas bills, or a letter delivered via the Indian Postal Department. When the Election Commission receives your form number 6, an officer then will come to your home to verify and obtain your signature on the application form. Now comes the offline process. For the offline process, you can get your form number 6 from the offices of the electoral registration officers or the assistant electoral registration. It is, of course, free of cost. After that, either you can fill the form before the electoral registration officer of the home constituency or post it with relevant documents to these officers. Now, the postal address of these officers are available again on the website of the Election Commission of India. After the Election Commission receives your form number 6 with the required documents, your name will be then included in the electoral rolls within a week's time. What about students? Well, if you are a student and want to be enrolled as a voter at the place of your college or university, then you will have to include a bona fide certificate by the head of the institution with your other supporting documents. So now that you know that it's possible to vote while you're away from home too, get your name on that voter list and make your vote count.
Co-presented by LIC, Har Pal Aapke Saath. Powered by Duraguard Cement, a Nuvoco product. In association with Snapdeal.
Hello and welcome. To talk about the economic survey that's been presented by the Government of India, we're joined by the man who brought this survey together. Principal Economic Advisor Sanjeev Sanyal joins Siddharth and me live and exclusive on India Today. Siddharth, this is the first time that Sanjeev has been involved as intensively as he has in the hands-on task of driving the economic survey process. He's been involved in inputting, but this is the first time, Sanjeev, you brought the survey together, and it comes at a time of great economic uncertainty. We're in the midst of an Omicron wave. Hopefully that wave is now beginning to recede. Give our viewers a sense at the outset of the kind of calculations that you've done, the base that you've built, on the back of which you're projecting an 8 to 8.5% growth in the GDP in the next fiscal. Because one of the things I notice is you're hoping that there will be no further pandemic-related economic disruption. Now that's a big unknown that you factored into consideration while you come up with these kind of growth projections. Sanjeev, welcome. How was this ride?
Pleasure to be on your show. Let me say that the forecast that we have put for the next financial year of 8 to 8.5% is based on a bunch of assumptions. Obviously, any forecast about the future is based on certain assumptions. And you mentioned one of them, which is that future waves of COVID, if any, will not be particularly disruptive as far as the impact on the economy is concerned. Now, obviously, it's an assumption, but I don't think it's an unreasonable assumption. Fact of the matter is, we have had very widespread coverage of the vaccination program. Pretty much the whole adult population has at least had one dose. Even now we are going into booster doses in some segments of the population. So I think it's fair to say that the kinds of economic disruptions that we've had, particularly for contact-based services, will be anywhere near like what we saw in the last few years.
Sanjeev, one of the highlights of the survey, and for our viewers, it clearly says that the services sector will record 8.2% growth in the current financial year versus a contraction of 8.4%. So, services has been one of the better performing sectors, yet it needs support due to the latest disruption by Omicron. Had the government supported it more, would services sector growth have been better? Would the restaurants, the hotels, the gyms and other sectors of the economy have performed better?
So first of all, let me point out that in fact it is not the case that services is one of the better performing sectors over the last 2 years. The agriculture sector actually wasn't terribly affected and is now well above pre-pandemic levels. Not surprisingly, this is a sector that wasn't that affected by lockdowns and things like that. The industrial sector has also seen a smart recovery and in fact is now well above pre-pandemic levels. Even within the services sector, there are segments like finance, public administration and so on that are also above pre-pandemic levels. So the issue really relates to contact-intensive services, which includes obviously entertainment, tourism, travel. I mean, nothing very surprising. You could guess which ones they are. Now, obviously, those segments have a problem because all the impact of various kinds of regulations, lockdowns, etc., happens directly to them. And although they do, at least so far, they did recover quite strongly whenever we open things up. Again, you have this episode with Omicron where some impact would have happened, although the numbers of that are not clear. So the point is, yes, true that the contact-intensive segment of the services sector has faced a lot of issues, not surprising. But I think overall, the economy is now functioning above pre-pandemic levels, and you can see that whether you calculate it by GVA or you calculate it by GDP.
One of the fears, Sanjeev, that you're highlighting in the budget is about global oil prices and the impact that this could have on India. We're already seeing the stress, the strain between Russia and Ukraine, and crude is now $90 a barrel. The government has held back, even though you won't accept this on record, raising oil prices in India, petrol prices, because of the elections. But once UP is over, come the 10th of March, given the fact that crude internationally is under pressure, would that then lead me to fear that once the elections in Uttar Pradesh and elsewhere are over, we could actually see a sharp spurt, which is in some senses beyond your control?
Well, we have highlighted the fact that international inflation is an issue. It's just not all about oil prices, but you're seeing high inflationary impact happening in developed countries, advanced countries as well. It's happening from supply side shortages in chips, container shortages of various kinds, and of course, as you mentioned, oil prices. Now, obviously, oil prices is notoriously difficult to predict, so I have not attempted to do that. While we are talking about $90 to a barrel today, let me remind you, just 18 months ago, that was below $20. So, I can't base my future views based on trying to predict oil prices. All that we have done is we presented what we think is a reasonable assumption in the range of $70 to $75 as a part of the assumption. And we have carried on. Now, obviously, there is a lot of unpredictability that remains looking into the future, whether it's geopolitics in Eastern Europe or East Asia or climate change and so on. And one of the themes of the economic survey as a result of that is not so much about forecasting the future, but it's about how do you make policy in an environment of uncertainty. And there's a very significant section on agile policy making, i.e. how do you deal with high frequency data. There's a long section on supply side measures, whether it's on resilience or flexibility. So I think the key message of the economic survey is, here is the forecast based on these assumptions. But we understand the world is uncertain. But so the real thrust of economic survey is about how do you make policy for this uncertain world, not about getting tied up with the forecast as such, but about how do you have responsive economic policy while maintaining certain amount of safety nets for the vulnerable sections and so on. So really the economic survey is about that. And I do hope you will read some of the sections on barbell strategy, agile, and so on. That is, they've given significant segments of that.
Sanjeev, one of the points that perhaps our viewers would want your views on, this is the third pandemic survey. The government, both at the center and the states, suffered huge revenue losses in the first year of the pandemic. It picked up in the second. This year, by all accounts, is a bumper year as far as revenues are concerned. What does that mean? Is Bharat Sarkar now finally out of the losses that it has suffered, and can it therefore be in a better position to spend in the future?
Since I was the co-author of the last several economic survey, let me say that this is not the third COVID survey. This is the second year into COVID that we have talked about COVID. The one in 1920 was presented in February when COVID was not really a major issue. So let me say that obviously we will be taking into account a large amount of evolving situation on various fronts, and much of what this survey does is talks about how you respond to unexpected turns of fate, so to speak. So one of the ways in which you deal with it is, of course, the use of fiscal policy. And the point that is made is that, as it happens to be, that the Indian government took very conservative and controlled approach towards fiscal policy, and that has stood us in very good stead, because basically where it was necessary, we went out there and spent, whether it's on safety nets of various kinds for vulnerable sections, providing free food or providing liquidity for MSMEs and so on, so that kind of safety net. But other times when the opportunity arrives where they could open up the economy, ramp up demand using capital expenditure on infrastructure and so on. So the key thing here has been the issue of agile policy making. And that has been possible because we have had the space to do it. And revenues reviving gives us, again, space to respond where necessary. We can use other policies too. The monetary policy is also there, and that was used too. We have supply-side measures that was also used. But since you specifically mentioned fiscal policy, yes, that was also used too. But the key thing here is to respond according to the evolving situation.
Sanjeev, if you look at the data coming out from the Center for the Monitoring of the Indian Economy, and I know the government doesn't particularly like it, but it's the only thing we have available at the moment on unemployment. Unemployment is at a 4-month high in December. What we saw in Bihar recently was very disturbing. Some pundits have called it India's first employment riots, or unemployment riots, where you had some 35,000 posts in the railways and 1.25 crore people applied for that. What is your view on the current unemployment situation in the country, the restlessness of the youth, the inability to get jobs, especially on the back of the pandemic and the economic stress that's caused? In any case, at any time, employment is a huge concern, accentuated because of extraneous factors, including the pandemic and these riots that we've seen in Bihar.
So I don't want to comment on a specific incident. The fact of the matter is that, there's always been the case that whenever government jobs were advertised, very large numbers would apply. This has been true always, even much before COVID and recent events. So I wouldn't comment on that specific incident specifically. But yes, I mean, job creation is an important issue that we take seriously. What has happened as a result of it? Well, the data, as it suggests, is the comprehensive data suggests that there was certainly an impact on employment during the first lockdown. It recovered quite strongly, in fact, almost back to pre-COVID levels when the recovery happened in the second half of the year 2021. Since then, the overall data is not available in a comprehensive way, so we can use other proxies. What do the proxies say? Well, we have EPFO data, which suggests that formal jobs did recover very strongly, and have continued to recover quite strongly into this year. Now, some of this is maybe formalization, but I think most evidence is that there is also strong recovery in the new jobs also coming from there. So I think that source of jobs generation is happening, and it's a matter of keeping the economic momentum going, opening up the contact-intensive sectors in services, and allowing those growth to come. So this is not lack of jobs, this is allowing that flow to sustain. But on the rural side, the proxy that we use is, of course, Manrega data. Again, a very similar cycle is shown. There is a spike that happens during the lockdown. It comes down quite substantially. A smaller, a more shallow increase during the second wave, and then it comes down substantially after that. But it hasn't yet come down to pre-pandemic levels. So Manrega demand is still somewhat above pre-pandemic level. But in this as well, we need to be careful how we interpret it. So very often people will interpret this, this stress must be showing up in the migrant source states. So we looked at actually migrant source, we looked at the Manrega data state by state, and it shows something quite interesting, which we hadn't expected, which is that the source states, like Bihar, for example, actually have Manrega demand has actually fallen below pre-pandemic levels. And in many recipient states like Punjab, Maharashtra and so on, where Manrega demand has actually gone up. Now, I don't know what this trend shows, or suggests that more research is needed for this, but I'm just pointing out to you that a simplistic interpretation of the Manrega data may not be appropriate.
Sanjeev, a quick follow-up on that, and this is to you as an economist who's been outside government and now in the government for several years. Why does a large economy like India not have a comprehensive government-published set of employment numbers? It's not rocket science, and we excel at that, by the way. Why don't we have that as yet?
So this will have to be the last question, because as you know, I have to move on to another interview.
One more and then last.
But let me say that Okay, literally one more after this. But so the thing is that, well, it actually is somewhat more complicated than rocket science, because there are many shades of grey in employment in India in general, because, you know, there's a lot of informality. People are doing a lot of part-time jobs. You know, they're working in agriculture part of the time, they're working in wage earnings, salaries in other time points of the year, and so on. So this has been a tricky issue for a long time, long debate on this issue. But oddly enough, this is actually going to become even more complicated into the future for not just us, but for the world, because when you're taking into account, for example, significant proportion of the workforce doing gig economy. Now, then, you know, how do you define a gig worker as a worker or not? So there will be all kinds of complications on this data front. It's a longer debate, not meant for a quick debate on television like this.
Many people who are watching at this time, Sanjeev, are wondering what the government will ultimately do on regulating digital currencies. There was a bill which was to come, which was kind of held back. So we won't get into the specifics of what happens, but can you explain your thinking as principal economic advisor? Can you explain as best as you understand the thinking within the finance ministry on what would be the right approach and how to deal with cryptocurrencies?
Well, as far as crypto is concerned, this is a matter that is being debated extensively both in Parliament and in the Ministry of Finance. We appreciate the risks that many experts, including the Reserve Bank, has raised about to the financial stability and the impact of that. We are also watching keenly in what's happening to other countries, like what is happening in, for example, El Salvador, that adopted bitcoins. So we are very, very open. We are very, very cognizant of the risks to emanating from cryptocurrencies. At the same time, we appreciate that there are certain innovation-related benefits as well. So, you know, let me not step in where, frankly, a debate is still going on, and I'm sure we will get a much clearer picture about our thinking in the very near future.
Okay, so as promised, last question to you, Sanjeev, and this is about imports from China. Ever since the Galwan clashes,
I literally have
one last question. Sanjeev, one last question. I know you need to bold, but one last question. So very quickly.
No, I really know nothing about Galwan.
No, hear my question. It's got nothing to do with Galwan. My question is on imports from China. After all the restrictions the government put in place on Chinese investments in telecom and elsewhere, one would have assumed that there would be a dip in imports coming from China. Instead, numbers are going up. Why is that happening? How do you see that? And to what extent do you think we've been able to move away from importing from China?
So first of all, we can't wish away China. I mean, we do trade with them. We import and export with them, and they are an important part of the world economy. So we can't wish them away, and certainly not in any short time frame. What we can do is not protect our national interests in various ways. For example, by not participating in RCEP, for example. So we have built some ways in which to protect our national interests, but at the same time, we can't wish away the fact that China is an important part of the world economy, and we have to engage with them at the same time. So that is where we are at. It's an evolving thing in which obviously we will take in the longer run. Hopefully, we will be able to build enough capacities for certain inputs for which we are dependent on not just China but other countries as well. There's a lot of effort, as you know, on Atmanirbhar Bharat and others, creating chip capacities in India, pharmaceutical ingredients. But obviously, these capacities don't pop up overnight. You have to build them and inculcate them. So this takes time. And even after doing all of that, it is not the case that we will not be dealing with China in economic terms. It is a very important part of the world economy. And even then, we will have to deal with it. The key thing is, do we or do we not have enough bulwarks in order to be able to defend our national interests? And I will argue that we are slowly but steadily building in that direction.
Okay, we know you've had a long and stressful day. We won't hold you back any longer. Hopefully, we'll have you back after the budget. So thank you so much, Sanjeev
Thank you so much.
And we enjoyed that press conference. You were able to bring things together well, so nicely done. Compliments, and we'll see you tomorrow. Just a day ahead of the booster dose budget, Finance Minister Nirmala Sitharaman has presented on the floor of the House the economic survey. What are the key indications and what can we draw about what to expect in the union budget tomorrow? You're watching India Today and Business Today's live and continuing coverage of the economic survey first and then the union budget. I've got Siddharth Zarabi, Managing Editor, BTTV, joining me as well. Welcome, Siddharth. And at this time, we've got with us for perspective Vice Chairperson of the Niti Aayog, Dr. Rajiv Kumar, joining us on this broadcast. One of the key highlights of the economic survey is a projection of a GDP growth rate of between 8 and 8.5. I want to walk across to the Budget Intelligence dashboard as I welcome Dr. Kumar and show you where the GDP story has been so far. And we saw, Dr. Rajiv Kumar, recently the IMF projected, now you're projecting for next year 8 to 8.5. The IMF had a projection of more than 9%. So you're being conservative in comparison with the International Monetary Fund. Why is it that you believe that the Indian GDP will grow between 8 to 8.5 in comparison with the more optimistic projections we're seeing from abroad?
Hi Rahul, good to be here. And I think government is being more conservative simply to, not to be surprised on the downside. I think these estimates are based on our own realistic assumptions of how the different sectors will play out, and how private investment and demand and consumption will rise in the next year. So I think it is always better to be surprised on the upside, and there is therefore, just like last year, the budget had very conservative numbers on revenues and on growth, etc. Similarly, this year, this government is in the business of making realistic assumptions and estimates rather than going overboard. So that's the story essentially. And the fact is that we are not sure about the uncertainty. And what the economic survey points out is that this government has now got into a policy approach which responds to the changing parameters, changing data, the variables, what it calls the agile approach. So as things pan out, and if we don't have the uncertainty because of Omicron, etc., these estimates will of course be revised upwards.
Rajiv Kumar, what do you think the priority should be when it comes to next year's finances of the central government? Inflation control or continuing growth? Because you explained the context of the survey, which is for the current year. But if we look ahead, what priorities would you be setting?
No, clearly growth, Siddharth. Clearly growth, simply because I think, one, the government, the finance minister's primary responsibility is the fiscal policy, and there we have done very well. I think there's a huge amount of fiscal space available for the government to ramp up its capex, which already rose by 15% this year. And I think the government should be doing whatever it can to ramp up growth in different sectors, both especially in manufacturing and in services, where agriculture has done well. Inflation, is a global phenomenon at the moment, and I think and it's not a demand-led phenomena. It's a result, surprisingly this time, of supply-side bottlenecks and supply-side constraints, and I think those are going to be taken care of as we go forward. And so therefore we can think about inflation being more transitory than permanent, and therefore policy response should be to promote growth rather than at the moment focus on, especially fiscal policy response, rather than to be focused on inflation.
हमने देश की जनता से पूछा, बीजेपी में पीएम मोदी का उत्तराधिकारी आपको कौन दिखाई देता है?
To know the answer of several such other questions, read the latest edition of India Today's exclusive Mood of the Nation poll. Subscribe to the India Today magazine now.
सीएम की रेस में कौन आगे है? हम आपको पहला, दूसरा और तीसरा नंबर दिखाएंगे.
To know the answer of several such other questions, read the latest edition of India Today's exclusive Mood of the Nation poll. Subscribe to the India Today magazine now.
हमने देश की जनता से पूछा, ये आरोप लगता है कि मौजूदा सरकार में देश में लोकतंत्र खतरे में है.
To know the answer of several such other questions, read the latest edition of India Today's exclusive Mood of the Nation poll. Subscribe to the India Today magazine now.
You are watching India Today. You are
Co-presented by LIC, हर पल आपके साथ. Powered by Duragard Cement, a Nuvoco product. In association with Snapdeal.
Hello and welcome to Business Today. I'm Siddharth Zarabi, and here are the headlines tonight. Bulls back on Dalal Street. Markets logged best day in 3 weeks ahead of the union budget. The Sensex ends 814 points higher in a broad-based rally. India is all set for the Modi government's 10th union budget. Finance Minister Nirmala Sitharaman to announce the budget proposals Tuesday morning at 11 a.m. Tune in to watch non-stop coverage on India Today from 7 a.m. tomorrow. The Economic Survey 2022 pegs India's GDP growth rate at between 8 to 8.5% in the next financial year. Pegs growth above China for this year and the next 2 years. Surest signs that the government will loosen its purse strings in the budget for social schemes and capital expenditure. The Economic Survey says enough fiscal space for the government to ramp up capital spending. Tata Steel wins the bid for Odisha-based PSU. Neelachal Ispat Nigam gets the company's 1 million ton steel plant for 12,100 crore rupees. The Economic Survey was tabled in Parliament earlier today, a day ahead of the union budget. The survey, which presents the state of the economy in the current financial year, also gives hints of policy prescriptions in the budget. The survey was tabled by Finance Minister Nirmala Sitharaman. It projects that India's economy will grow at 9.2% in the current financial year and 8 to 8.5% in the next financial year. The projection is pretty conservative in comparison to other forecasts by various agencies, but it puts India's growth ahead of China this year as well as the forthcoming years. There are warnings as far as inflation is concerned, as crude oil is on the boil and threatens the recovery. Inflation is also up and could rise further. However, a big relief to the government is where the survey says that there's enough fiscal space to continue to ramp up capital spending, indicating that perhaps the budget, the 10th of the Modi government, could loosen the purse strings a little bit more. Joining me to discuss the economic survey and what to expect in the budget in a few hours from now is a stellar panel. Rahul Bajoria, MD and Chief India Economist at Barclays, Dr. Aurodeep Nandi, India Economist at Nomura, Indranil Pan, Chief Economist, Yes Bank. I'm going to begin by coming to you, Rahul, on the latest GDP projections. And the projections make it clear that we will see a slight decline in next year's growth. And if we look at the 3 years, FY21, the revised number is a contraction of 6.6%, FY22, 9.2% at this stage, and a projection of 8 to 8.5%. What does this tell the average man about how the Indian economy is growing?
Thanks, Siddharth. So I think the way to read this, series of numbers is basically that India did suffer a very large, shock in its activity, indicators in the pandemic year, which was fiscal year, 2021. And then, we have had, I would say, a reasonable recovery, which was also partly hampered by the fact that, we had the Delta wave, at the very beginning of the financial year. But, the recovery since then has been reasonably strong, and we are roughly at the same place where the economy was before the pandemic. So in that particular context, a projection of 8.5%, although we think it might be a tad optimistic, but still shows that, the economy is back on a path where the economic growth outlook remains reasonably resilient. India will be the fastest growing economy, even if the numbers are a tad on the lower side of that particular range. And we reckon that, this particular year will be the year when you really see, India's manufacturing activity improve. There are some tailwinds to be enjoyed. And from that standpoint, we expect these numbers to be broadly realized. And the message is one of resiliency and some hope, for the larger population, to take away from this particular projection.
Indranil, is 8 to 8.5% in line with your own projections? Are there headwinds, for example, oil, that could pose a challenge to these numbers? Your views on this?
Yeah, so 8 definitely is higher than our own numbers that we worked our budget estimates for. Our numbers are more closer to a 7.5%. Now, contextually, I think what needs to be placed on the table is the fact that given the advanced estimate is looking at a 9.2%, the second half of the current financial year is likely to be significantly softer than the first half, which clearly, yes, there are some base effects, which clearly also indicates that we are not sure about how the structural sort of positioning of the economy is in the current scenario as we try to get out of the pandemic, and we always keep talking about the K-shaped recovery. How it is supposed to be supporting a relatively high growth rate of 8.5%. So that possibly makes me a bit skeptical about the 8.5%. But having said that, I think the context is more in terms of how the budget numbers are placed, and to that extent, the nominal GDP growth will also be quite sort of important. And given that the economic survey talked about headwinds so far as inflation pressures and global commodity prices are concerned, my sense is that the overall inflation, especially with respect to the WPI, will be strong, which will provide sort of an upward bias to the nominal GDP, and that is likely to help the revenue numbers.
Revenue numbers have been a clear positive, the point that you make, Indranil, but I want to come to you, Oradeep. As far as this year's performance is concerned and some of the commentary in the economic survey, if I were to ask you to sort of read through the fine print and tell our viewers, what does it tell you about the framework and thinking of policymakers at North Block? The way I would like to describe it is that they seem to be very optimistic. This is the third year of the pandemic. The language seems to have far more optimism than we heard even outside the survey several months back.
Yeah, so I think there are a couple of aspects, right? One is the point you're talking of, which is on growth, right? And again, I think just like my other co-panelists, we have a slightly lower version of growth. Our expectation is 8.7% in FY22 and 7.8% in FY23. And look, I mean, there are various risks at play. But I think that's sort of just one part of the story, right? So you might agree or may not agree with the growth outlook. But I think what's really interesting when you kind of burst through the lines is the kind of broad fiscal policy think that the government has. And I think, excuse me. So there, I think there are a couple of things that kind of stand out. One is it doesn't seem like the government really sees this as a kind of a battle between growth versus fiscal consolidation. I think that essentially the broad sense is that as long as we generate growth, it should help in controlling medium-term debt. And so there is this sense in the economic survey where they're saying that, look, from a medium-term perspective, we expect the debt trajectory to start inflecting from here. So we are expecting lower growth, lower debt. Secondly, this kind of focus on capex, which has been pretty evident in government fiscal policy for the past 2-3 years, where there's been a lot of focus on capex. Now this year, we have a very high capex target, but the government is so far lagging on it. And what the economic survey says is that, look, this is happening because, we've had lockdowns, we've had labor shortages, but coming up, we are going to see a big ramp up of capital spending. And so, there is that focus on capex, which I think is very important for the budget tomorrow, because, if that really translates into similarly high capex growth. But the other very interesting thing is this whole barbell strategy, which they spoke of, right? Which sort of said that, look, we expanded the safety net for the most vulnerable, but on the flip side, we also remain very fluid in terms of upcoming economic data, and we'll adjust our policy accordingly, which essentially translates to the fact that, you could have a large increase in RevX, like it happened this year, in the middle of the year, if the government feels that growth is lagging, or if there is need for some kind of infusion. And so I think from the budget perspective, what this essentially says is that, if you read between the lines, is that yes, there's fiscal consolidation in spirit and, focus on growth in intent, right? So, one can expect strong budget on the capex side and sticky RevX, revenue expenditure, just based on the kind of indications we are getting in the survey.
Rahul, let's now talk about priorities that should be incorporated in a budget that is coming at roughly the midpoint of Modi 2.0. It is this government's 10th budget. It is Nirmala Sitharaman's 4th budget. Last year was very well received. What are the broad focus areas that you yourself are expecting from this effort?
So, Siddharth, I think one of the key points about this particular budget will be that, obviously with the kind of revenue outperformance we have seen, the total revenue to GDP ratio is now restored back to the pre-slowdown level, right? So in 2019-20, when the new government took charge, the economy was already experiencing a slowdown, and now those revenue numbers have been restored. Our sense is that, the discussion around fiscal space, and, to Aurodip's point that, capex spending has to remain reasonably elevated. How do you continue to do that at a time when you are balancing both consolidation requirement and also, the fact that fiscal support is very important to growth is likely to be a key thrust area, right? So this balance is something that, a lot of us will be looking out for tomorrow in their numbers and also in terms of their guidance. I think one of the key, opportunities, or, this also came out in the economic survey, is that the government was trying to do quite a few things, in the run-up to the pandemic. There was a lot of effort to revive growth, and a lot of those things had been put on hold, largely because the pandemic took hold. And so, now the government seems to be coming to a point where the mind space and the bandwidth to execute on some of these things is increasing. And, even today we had one more announcement of a potential privatization of a particular state-run company coming through. So I think that probably is something that I'll personally be looking out for, is that how much of an emphasis is there on moving to a post-COVID environment where fiscal priorities will be not just to support growth, but also provide some consolidation pressure.
This is a good point about consolidation. Indranil, how big a consolidation should there be? Should there be one? Or is it time for the government to be cautious, at least till the middle of the next financial year, and see how things are going? Because the third wave hopefully seems to be receding and we are vaccinated and therefore out of the woods to a large extent.
To put it in perspective, I think the fiscal response of India has been quite different from what has been in the rest of the world. Rest of the world, there was a clear strategy to boost fiscal along with the boost that was provided through the monetary policy. In India, the bulwark in terms of the pandemic support was more in terms of the monetary policy easing rather than the fiscal policy. Now, fiscal policy, therefore, clearly played on the perspective of the reforms measures and an expectation that private capital investments, private investments will actually pick up. Now, that has not happened. That has not happened simply because the consumption is lagging. Consumption is lagging because of some structural issues in the Indian economy, which are likely to have even widened due to the pandemic, which is clearly income inequality is a significant number of people possibly having slipped below the poverty line compared to the pre-pandemic levels. So some of these issues remain contextual if the government, through its fiscal policy, needs to provide the impetus to growth in an atmosphere where high inflation pressures and unwind of monetary easiness in the US and some of the other economies could actually force the hands of the Reserve Bank of India to tighten monetary policy. Therefore, I am not a voter of consolidation at this point in time, even agreeing to the fact that there is a stress in terms of the public debt. But I don't think this is a year of consolidation unless there is a bigger sort of stable platform that emerges for the Indian economy.
Oradeep, the same question really to you with an edit bit about, after all, how much do you think the current revenue buoyancy that we have seen in this year is likely to last next year? Collections may still be up, but are we going to see continued buoyancy in the form that we have seen this year? Oradeep, that question was for you.
Sorry. Oh, sorry. I didn't realize. So that's a very important point that you make. This kind of stellar growth, part of it could be because there might be something structural that has also shifted. But let's not forget, this is coming at a time when nominal GDP growth has been probably 17 to 18%. Now, compared to that, we expect nominal growth next year to be around 13% or so. So I think there has to be some, sense of, sort of realism as far as how much, you'll be able to get from taxes, especially in a situation where, your nominal growth is lower, your raw material costs are rising quite significantly. So your profits are likely to be also hit. The second aspect also is that unlike FY22, we won't be having the kind of bonanza excise collections, from fuel that we've seen this year because those taxes have been withdrawn. So, again, overall, I think it makes, it would be reasonable for the buoyancy to be decent. So around a unity or so, but probably the stellar growth rates that we've seen this year, it's likely to moderate from that.
Time for a quick break. Stay with us. We'll be back.
हमने देश की जनता से पूछा, बीजेपी में पीएम मोदी का उत्तराधिकारी आपको कौन दिखाई देता है?
To know the answer of several such other questions, read the latest edition of India Today's exclusive Mood of the Nation poll. Subscribe to the India Today magazine now.
सीएम की रेस में कौन आगे है? हम आपको पहला, दूसरा और तीसरा नंबर दिखाएंगे.
To know the answer of several such other questions, read the latest edition of India Today's exclusive Mood of the Nation poll. Subscribe to the India Today magazine now.
हमने देश की जनता से पूछा, ये आरोप लगता है कि मौजूदा सरकार में देश में लोकतंत्र खतरे में है.
To know the answer of several such other questions, read the latest edition of India Today's exclusive Mood of the Nation poll. Subscribe to the India Today magazine now.
virtual tourism is not something new. It's been there in the tourism world for many decades now. It's very prevalent in the US market from the 90s onwards. In this pandemic, people have not been able to travel. So our effort has been to give them the comfort of traveling virtually to as many places as they want to and trying.
Welcome back. You're watching the Business Today show. Rahul, let's turn to the management of how the fuel excise duties are handled. You've seen a situation where it became a huge issue, but it wasn't election year, of the kind of continuous rise in the base price as well as the higher imposts. Now, we get the logic of the pandemic dip and fuel excise being used to fill coffers. In November, we have seen a reversal to that, a cut. However, we have also parallelly seen that oil marketing companies are not raising prices since then. Crude oil has meanwhile continued to move northwards. This year is a year of 7 elections, of which 5 are happening in March. What does this tell you about the political economy management? Why not approach it with the same sort of fair, even-handed approach that we see in different sectors? Why is oil special and also not in the GST, Rahul?
Yeah, so I think as far as the the oil taxes are concerned, even if they are not, oil prices are concerned, even if they are not raised in the interim, we do think it's a delayed effect. It's not a denied effect, right? So prices will eventually go up. By our estimates, it could go up by anywhere between 5 to 6 rupees, both for petrol and for diesel, by the time we come to March and the election results are out. And so it will have some inflationary impact. I think the larger challenge, though, is that, over the last few years, oil taxes, ever since, say, 2014 end, when they had come down very sharply for the first time and the government had fiscalized quite of the gains, to basically reduce subsidies and then to actually increase their revenues. The oil dependency is something that is, increased quite a bit as far as our fiscal financing is concerned. And this is both at the central and at the state level, right? So it's not just the central government which is using oil as a way to finance its revenues, but also the states also are incrementally relying on it. Now, the one way to kind of come out of this particular trap, if we can call it that, is to basically look at other means of taxation. And here the GST is going to play a pretty big role in our opinion, that, as we come to a point where the assured revenues, the compensation for states is going to expire, there could be a discussion between the states and the center to basically use the GST as a way to kind of, compensate for some of these losses, and which will also, then be driven by a much larger base of goods and services, which can provide some alternate, to the entire oil economy, which has a lot of dimensions, not just economically, but also from a political standpoint.
Indranil, on taxation, we saw in 2015, the government virtually junked the direct taxes code. There was a report which has never been made public subsequently. We have seen tinkering, major ones like the corporate tax rate cuts, some here and there things on the personal income tax front. GST, as we know, the shape outside of the budget. Given all of this, should we expect anything in this budget as far as taxation is concerned?
Well, I think to a certain extent, as I think I have been pointing out, consumption needs to be sort of looked at. The private consumption demand is still lagging that of the pre-pandemic. Wage growth in the rural segment has been low. people who might have lost their jobs during the peak of the pandemic, some of them, or a significant chunk of them, may have got their jobs back, but at a relatively lower wages. So I think in terms of my own understanding, I think the critical piece that is lacking in the economy is personal consumption, the way it needs to be looked at. And to that extent, the need from the budget perspective is to provide some confidence to the consumers in the economy. That possibly can only be done through the taxes. So one way out, even if it may be relatively unpalatable to people like you and me, is a larger cess on individuals like you and me and in the higher income bracket, to be distributed through lower taxes or maybe merging of the lowest two tax slabs. And that probably can actually provide some sort of stabilization and impetus to consumer sentiment and allow consumers to consume in an atmosphere where we have already started seeing deposit rates and lending rates of the banking sector relatively turning, or at least having sort of flowed.
I'm going to thank all my economists here on the panel tonight, and you, the viewer. Thank you very much for tuning in.
हमने देश की जनता से पूछा, बीजेपी में पीएम मोदी का उत्तराधिकारी आपको कौन दिखाई देता है?
To know the answer of several such other questions, read the latest edition of India Today's exclusive Mood of the Nation poll. Subscribe to the India Today magazine now.
सीएम की रेस में कौन आगे है? हम आपको पहला, दूसरा और तीसरा नंबर दिखाएंगे.
To know the answer of several such other questions, read the latest edition of India Today's exclusive Mood of the Nation poll. Subscribe to the India Today magazine now.
हमने देश की जनता से पूछा, यह आरोप लगता है कि मौजूदा सरकार में देश में लोकतंत्र खतरे में है.
To know the answer of several such other questions, read the latest edition of India Today's exclusive Mood of the Nation poll. Subscribe to the India Today magazine now.
Are we in the end game of the COVID-19 pandemic? Well, this is possibly the question everybody on the planet is asking. A pandemic-causing virus can stay active for decades. But did you know that herd immunity and stabilizing of the virus through a less dangerous variant could end this pandemic? Well, researchers are now debating if Omicron is that variant that begins the end of this pandemic. Omicron is a highly infectious variant. Due to its highly communicable nature, it is a dominant variant in several countries, about 171 of them. So what does this really mean? It means that the immune systems of many people are now trained to identify and neutralize the virus. This is also a key to achieving herd immunity. Vaccination is another factor that helps to stimulate herd immunity. It is a state of the disease when the virus doesn't have enough victims to infect or spread to. In November 2021, South Africa reported the Omicron variant to the WHO, after which scientists found some facts that's going to interest you. South African researchers found that people who are previously infected with Delta variant can catch Omicron, but those infected by Omicron can't be infected by the Delta variant, especially if they are vaccinated. The published study was based on conducting samples from 23 people.